Hey, what's up, everybody? Welcome to the session. We're going to be starting here in 10 minutes with Matt Maylie, Chief Market Strategist at Miller Tabak and lead trader at the Benzinga Stock Picks Inner Circle chat room, where the live trading is happening all day, Monday to Friday, trading, buying calls, buying puts, trading the volatility. Folks, we have a lot to cover today, but just make sure you're here when we start in 10 minutes with Mr. Matt. And we'll be good to go. We have a great session planned. Don't want to miss it. So we'll see you guys here in a little bit. All right, everybody. Welcome to the session here we have for you today. My name's Rodrigo. I'll be here with you going over all this stuff today. We have a great session planned for you as always, and we're going to be here with Chief Market Strategist Matt Maylie at Chief Market Strategist at Miller Tabak. So just wanted to give you guys a quick intro there and a couple of shout outs there. Mary Andel says Matt Maylie is her favorite. Good stuff. Matt Maylie is definitely definitely my favorite there. Always helpful there. A couple shout outs there. We got Charles C. Wilson's Cobb is out there. Robin, Thomas, Valerie, Sumar, White, Ryan. What's up, dude? So we got a lot of nice, familiar, friendly faces here. A lot of members from the chat room there. And let me know in the chat when you guys are ready to start, when you guys are good to go, right? We put a timer and everything, so everybody's on time and everything. So if you're good to go, let me know in the chat. But basically, a lot of you guys were asking me where Matt was. Basically, Matt is in the live trading room Monday to Friday, 9 to 5 p.m. And that's really why he wasn't here before, because that's where he is with his live trading group. Here with Benzinga. So some of the members are here, so good shout out there. But basically today, guys, we're going to be going over a lot of topics here. Trade ideas, Matt's options trading strategy for bear and bull markets, sector scoping, options education, setups for equities, options, crypto, commodities, buys and sells, charting, market discussions, and Fed, Ukraine inflation, and the lockdowns in China as well. So stick around. Make sure you stick around through the whole session. We're gonna be here like 2 hours or something like that. And around there, depending how Matt is going, wants to do. And stick around until the end. We will have a live Q&A and a real-time view of the inner circle live trading for Matt. So Valerie's ready, Green's ready, C Jenkins in the house, Martin, Mohammed, Sharif, Trader Jack. All right, let's go, guys. I think we're good to go. Let's go ahead and bring in the man himself, the man of the hour, 40 years in the industry, 40 years in the industry here. Let's go ahead and bring on Matt Maylie, guys. Let's go. All right, Mr. Matt, I think we're good to go here. We have him in the building.
There we go. Sorry about that. What's going on, Rodrigo? How are you, bud?
I'm doing good, man. A lot of things happening in the market. It's really always good to have these little fireside chat with you because we really just break everything down to the point where everybody leaves and at the end of the session, everybody has a much better understanding really of what's happening in the markets and that they can profit from this. They don't have to sit on the sidelines, right?
Exactly. This is one of the biggest things for that I talk about a lot recently, and is that there's been such a huge change in the marketplace in the last. Well, it's taken place over the last 10 years, but it's really come together in the last several, where people, because of the enhancement of whether it be ETFs, inverse ETFs, which compares leveraged inverse ETFs, and also in the options market. You have, before it used to be every quarter we had different we had quarterly options. So if you wanted to buy some protection, or if you wanted to make a downside bet, you had two choices. You could buy some put options that went way out into the future. I mean, in most cases, several months, which, there's time value in there, and that makes the options very, very expensive. The other way, of course, is to short, and that's very difficult for individuals to do. If you short a stock that's going, it's a $20 stock, and if you buy a stock at 20 and it goes to zero, well, you lose all of it. You lose 100% of your money. You short a stock at 20 and it goes up to 50, you lose more than 100%. Not only get to put in the 100%, they're going to ask you for more money. You're going to have to go find that money somewhere in the bank or sell some other stock to pay for that. So shorting for individuals is a very, very tough thing to do. But now we have the tools to be able to do these things, to play the market on both sides. Not only can we make it downside bets, but we can make it's much cheaper to make upside bets as well. Right. And the reason for this is because of the weekly options that we have in so many different stocks nowadays. Again, they expire every week. Instead of having to say, well, geez, the expiration for March just took place. I've got to buy some S&P options or some Apple options that go out in June. I can buy them that expire Friday. Or when it comes to the index options, I can buy them right 3 times a week. So it's a great way to really get
And now you do this. Now I remember, just for the folks that don't know, Matt Maylie has the record at Benzinga for the highest, most insane trade. You want to talk about like meme type of gains? Like, the most recent one was the FXI one, and some people made up to 14,000. I know that you sent out the alerts, the actual alerts to sell when it was up 2,000, and then went up, it was 7,000. And
Right.
you have some of those trades that you're going to show us so that you can like explain to the folks really how do you apply this strategy to be able to make because honestly, man, I don't even think the lottery has those kind of gains, to be honest, so
Well,
I think
it's like anything else. It's there are the risk rewards, but when you get sometimes where the risk we want to see that just not just guessing. So what's going to be the next meme stop that hopefully goes up, that gets on these chat boards and people start to run it. That's kind of a guessing game because geez, it has a lot of highs. It has a high short interest, but when's it really going to catch traction? I mean, a lot of stocks can go, a long time before they actually catch some traction. But so, I try to combine what would be fundamental analysis, technical analysis, use a lot of charts, sentiment, positioning, etc. And we really get some great trades. And the FXI, the trade you're talking about was in the FXI, which is the ETF for the Chinese high cap or large cap stocks. And a couple of weeks, this was about a month, maybe a month and a half ago, maybe a little over a month ago, the FXI was incredibly oversold, and for good reason. Because number one, the company, the country's been cracking down on all their technology companies for a year now, and also the U.S. companies, the SEC here in the U.S. were saying they're going to delist a lot of these technology names. So these stocks were just getting crushed. And so I looked at using technical analysis. I saw that and we'll look at the chart shortly, but we look at the technical analysis, the stock had become ridiculously oversold, number one. Number two, even though I knew, and even though I'm bearish on the Chinese market, or on a longer term basis, I just said this can't go any lower. It's too oversold. Too many people are shorted. Too many people are bearish on it. And sure enough, we swooped in, and I came in and said, let's buy the call options on the FXI. And we were able to buy them, and literally went in one day, and I said, it's a specific time. This is the option to buy. This is the expiration date. This is the strike price. Let's go in and buy them. A couple days later, we bought them. We sold them, and I told specific time, hey, we're going to sell half here. Now, it was up over 2,000%, but I said, this thing is good. And what happened was the FXI rallied 22% a day. It was like 2 days later. We got a little bit of profit one day, and then all of a sudden they shot up. I'll show you the charts in just a second. But we went in, and then when we were up about 2,000%, I was like, this thing could go higher, but we can't be greedy. And, we always look at things and say, geez, I left some money on the table. And you're up 2,000%. I mean, you can't get, in 2 days, you can't get mad about leaving money on the table. Well, it went up further. It got up 7,000%. I said, okay, let's go in and sell the rest of it, or let's sell more here. Some people held on and made 14,000% in just a couple of days. And this is just, and again, this is not something that happens all the time. We had a similar one that happened last year as well in Viacom, which I'll show you some charts on that too. But these are the types of things that we look for when we get that, it's sometimes they end up being 20% gains or 80% gains or 200% gains. But and sometimes we get these huge hit it out of the park grand slam home runs. And it's not just guessing on a meme stock. We use the fundamental analysis, the positioning, and we just, and one of the other things is I just use my knowledge, my 40 years experience to know that I knew not only these things were oversold, but China could not afford to let their stock market crash, okay? And unlike other companies, they can just come in and buy the stocks themselves. Some other countries actually do that. I mean, Japan has been buying ETFs. The government's been buying ETFs.
Yeah, and I just want to show them really quick here, Matt, because I found the exact alert for the FXI trade. And this is the actual sell alert as well, right? I sold, and this is, you have a timestamp. This is why it's very important to have it in this format, guys, because everybody can see it, verify it. Transparency is so important, with this. So, we have right there the sell alert. I sold the rest of my FXI. So that was there was a prior alert that you had sold them right there.
Yeah, exactly. Sold some right near the opening.
Right there.
And then we waited a little bit later in the day and sold some more. So it was Then again, some people, and again, not everybody holds on. I mean, not everybody does exactly what I do. They buy them a little bit earlier, a little bit later, sell them a little bit later. I mean, and the Viacom, we'll show you a Viacom trade. Do you want me to go into share this?
Yeah,
Let me go
yeah.
into,
Let's go ahead and show them, because honestly, Matt, this is the way that this is the way that I trade options, and I wasn't successful when I started with options. And really, it's just as easy as following your trades. You don't have to. That's why you're doing this, because you don't have 40 years of experience in the stock market. Matt Maylie does, and really, you're pretty much following his trade. So it cannot be easier than this, guys.
okay, let me just pull up the right chart, and then I'll make it. Don't worry, I'll make it big enough so you can see it much better. Okay, this is there we go. There we go. Okay. Bang, bang. Okay, good. Okay, now let me just make it bigger so you can see it much better. Okay, here we go. So this is a situation. This was the situation that we were looking at. The FXI. This is the one that says last weekend's chart. Obviously, this is this was a chart that I put out in March. But you said, see, it was the most oversold it had ever been on its RSI chart, weekly RSI chart. Okay, I'm sorry, it was a daily RSI chart, down to 14. Okay, I'd only see one other thing get down lower than that. That was Meta, Facebook, got even more oversold at one point. But I mean, this is about as oversold as you can get. Again, now what I used here was this technical analysis. This is what's called an RSI, the Relative Strength Index, and it gives you an idea of when to buy and sell stocks when they get oversold and overbought. When they get down to the green line with a 30-point rating, that tells you it's a green line. That tells you you should buy here. It's oversold. Go ahead and buy. And when it gets up to the red line, that's 70. It's a 70 level. That's good. Stop buying, and you can even sell. But of course, what we like to see is when they get way above those lines. Okay, above the line on the sell side, on the overbought side, or below the line on the oversold side. So this is when I came in and said, this is ridiculous. Number one, it's ridiculously oversold. And number two, the Chinese government is in my experience over the years, I knew they couldn't let it go much further. They would come in and support their market. And sure enough, the next day they basically did the same thing. They did the thing. So this is what happened. You see how it is? We had the huge rally of up 27%. See how this thing, let's go back. See there what was there. See this RSI chart way down here, the stocks way down here, or the ETF, I should say. And look at the bounce. Whoops. Look at the bounce we had. Oops, went too far. Yeah, oversold, and look at the bounce we had. Just a huge bounce. Okay, and then so this was the call option, and we bought it on the 15th, right? Remember here in March, right in here, right in the middle of March, right in the middle of the month. And when it got basically 3,000%, it said 2,900, but anyway, 3,000%. Now we bought these late in the day. You can see we bought them, and I had the exact time stamp on it as Rodrigo mentioned. And we bought them about an hour before the close. And sure enough, when the market opened, I didn't do anything. Sometimes when I see a huge move, I move right away. It's like, hey, let's not wait around. But this time I did, because it was just so ridiculously oversold. Not only that, I knew the bounce would be more than just a technical one. It would be a manipulated one, because the Chinese government would come in. And so we sold for basically a 3,000% gain. This isn't just a few hours. I mean, obviously it was 2 days, but a few hours of trading. Excuse me, bought them about 3 o'clock and sold them the next day, before about an hour into the trading. But we didn't sell all of them. Like I said, I just really liked the trade. And so we held on to half, and we sold some more. Again, here, let me just pull this out of the way, pull something out of the way. You can see that we sold some more here at the end of the day. At the very end of the day, I said, this is out of control. We can't get greedy. I don't want to get greedy here. So it was almost 8,000%, 7,800%. Some people held on to it the next day and sold it for even more as it rallied further. I did not. And I will say this: there's one of the great things about the chat room that we use is that there are people in it who are given ideas that aren't mine all the time. I mean, for instance, I'll show you this in a minute. But this in the last week or so, a little bit more in a week, I've talked a lot about how advanced micro devices. If it broke $100, the stock would get hit hard. Now, I did not put down a specific trade on that, but some people did, and profited very, very nicely. The stock went down 14% from that $100 level. And so if the stock goes down 14%, those put options went up a lot. The same thing when Tesla, and again, I'll show that to you, but when Tesla broke its 100-day moving average yesterday, that's the people who made I didn't get a specific trade in, but some people did, and told and mentioned on the chat that they had made very nice profits. I think it was 80%. I can't remember exactly what. Might have even been 100%. But anyway, this very nice gains, and some who held on may have held on even longer and made more money. But the point is that these are the types of things that we were using a combination. In this case, it wasn't a fundamental call. I'm still worried about the market, but I knew the political aspects that involved with China. 40 years of experience taught me that. And like I said, the technical aspect of it made it one that was a very easy, I say easy, but it was an easy call. It just there was nobody left to sell. It was just amazing. Now I'm going to show you another one here, and that we did last year. And again, we don't, believe me, I wish we had these kind of trades once a month or once a week. We'd all retire in a year. But we get them. We do get them a couple times a year, or at least we get them every once in a while. Let me make sure that's not it. Hold on. There it is. There it is. Okay, let me just make sure. Great. Okay. Now, make sure I have it. This is the situation. I'm going to blow it up for you so you can see it again. This was the situation we did last year. And believe me, I'm going to tell you about more other real nice winners we've had more recently and some that we've had this week. And we're going to cover the ones that I'm looking for as we go into next week. The rest of this week's going to be real interesting, and we're going to have to stay very nimble. But I think next week we're going to have some. I made some nice money in some puts this week. I think next week's going to be the big one where we make the calls. Because and I'll go over it later. But anyway, so here was the situation. Again, it was a technical thing. Remember back in March of 2021, GameStop and the meme. I'm sorry, AMC. They were the first two big meme stocks, and they were going crazy. Well, another one was Viacom, and again, it had a big short interest, and it just kept going higher and higher and higher. And I'm like, oh, and the same thing. I'm like, wait a minute. Movie company, a game shop. I mean, what? It's like, but Viacom, very legitimate company, very good company. This stock's going to do very well. But it had a huge short interest, and it wasn't doing that well. When a stock goes up from, below, well, again, we know what happened. We know what happened when everything got knocked out during the pandemic. But from the beginning of the year, when you go from, under 40 to over 100, I mean, you're making well over 100%. And the stock that, these guys weren't making, weren't going to cure cancer. They weren't going to come up with something to replace the iPhone. They're just doing movies and TV shows and streaming things. Okay. This is, they're not going to change the world. So I knew that this thing was getting ridiculous. But then I just started looking at the charts. Again, I went back to the chart. That's the fundamental side. I knew it was getting ridiculous, but look how overbought it got. Let me see it. I forgot. Oops. Too bad, because I used to be able to. Okay, sorry. Okay, but I used to have it where you could sell, where we still had got oversold. But you see how this RSI chart? This is a weekly RSI chart. Every time it got overbought, got above that red line, it sold off. It sold off there. Okay. It did this sell-off, obviously you can see, was a very small one, but this one, again, these don't look like big moves, but I mean, that's a 20% decline there. This one here, I mean, that was, let's see, 40, I mean, that was a 30% decline. I mean, and then here, of course, it led to a very long-term decline. But this one, I kept waiting and waiting. It's like, wait, this is out of control. And I knew the meme stocks were going crazy. I knew the shorts were getting squeezed. But when I saw the RSI chart get to 95, I knew it can't go any higher than this. This is ridiculous. And literally the next day, the stock dropped 60%. We made 2,500% in the put options that day, in one day. And some people held on to it a little bit longer. And I talked about it. I came in and said, we've sold most of ours, but you want to sell the rest of it when it was when it was up 5,000%. And one person told me later they actually made over 10,000%. I can't verify that because it wasn't my trade. But when I looked at the option and saw that it was viable, that there was that much of a move, actually even a little bit more of that. But I can't verify that they actually made 10,000%. But we definitely made over 2,500% on most of it, and even more, a total of almost 5,000% on a part of the position. But these are the things that, don't get us wrong. We got to hit a lot of singles and doubles. We want those home runs, and we've had a couple of those just in this past week, and certainly in the last couple of weeks. And we've had some losers too. When the market really rallied more than I thought it would, and we had some losses. So I don't pretend to be perfect. If we were all perfect, we'd all, again, like I said, we'd all be worth $1 billion and we'd move on. But the point is that with what's going on in the marketplace today, there's the ability to do that. If in the middle of March, it would have been, could we have bought those? I mean, you don't know. Viacom, everybody's on a different rotation. Their Viacom options may have expired in May. It would have cost a lot of money. Now, again, we would have done very, very well, but we would have had to pay so much more for those options. So instead of making 5,000%, we would have made, less than maybe 100%. That's great. 100% is great. Or maybe it was 500%. That's great. But it ain't 5,000% or ain't 2,500%. That's the big difference that allows us to do it. And again, you can do it to the downside and to the upside. But the most important thing that everybody needs to realize right now is you can make it in both directions. The tools are there because we have weekly options. And I'm going to show you here that we also have, again, the index options, the SPY, which is the ETF for the S&P 500, the QQQ, which is the ETF for the NASDAQ, the NASDAQ 100, which is the 100 biggest stocks in the NASDAQ, and the IWMs, which we haven't traded as much lately, but I have to look more at those because they see some wildness too. And the IWM is the ETF for the Russell.
Right. So we've shown them some of these are the two biggest trades in the history of the Benzinga that you've done. Let's show the folks some of the most recent trades you've had, for these past, so they can see recently.
Right. Let's do it here now. Okay, just one other thing before we do that, and it's only going to take a second for me to say this, is that we hear all the time, and CNBC, there's a lot of great people on there. A lot of the people who are on the show is fine, but a lot of their guests are very good. Some maybe not so good, but maybe I'm one of those not so good. But I was on. If you were up this morning at 5 a.m. New York time or Eastern time, I was on there this morning. But and I'm on pretty regularly, almost every week. But a lot of them are just talking about, let's talk about weathering the storm. I'm like, I want to do more than just weather the storm because we have the tools, like I said, to more than weather the storm. I want to take advantage of it. I want to profit from this deep correction bear. It was a bear market in the NASDAQ, and I think we'll end up being a bear market in the S&P, and we can go over those reasons later. But this is the whole idea, is that because when we get through this thing, when the bottom comes, there's going to be people panicking and selling at the exact wrong time. Those of us who have a little cash on the sidelines are going to be able to profit. More importantly, those who profited on the way down, haven't lost anything, are going to have the confidence to step in and really, you're not going to get the exact bottom, but you're going to be able to buy the stocks at the bottom, like Warren Buffett has been doing for 70 years, 70, 80 years, and really get the ones where you get, without, taking huge risk, you can make just huge gains. So that's what I do. But let's go, I want to go to these, the ones we've done more recently. Let's just go down here because I want to, sorry about that. Okay, here we go. Okay, I talked about the FXI. Okay, whoops. Okay. This is something we did in February. Now, again, I'm going to talk about something we did in February, more recently, February, March, and April, and then I'm going to tell you about the stuff we just done literally this week. But when the Fed was talking about, this is when we did it on both sides. Okay, we came into the Fed. The Fed was coming for their meeting, and I was worried about that. The market was holding up too well. We knew they were going to talk about. Now, this was not when they raised rates, but this was the time that we all knew, or we all were expecting, the Fed chairman, Powell, to confirm that they were going to be more aggressive, that they were indeed going to do QT, in other words, start shrinking their balance sheet and raise interest rates and even consider 50 basis points type of interest rate hikes. And we knew that was coming, and the market was holding up. So I said, let's go in and buy some puts. Now, this was literally at about 1:15, 1:30. I knew the announcement was coming at 2 o'clock. I knew at 2:30 the Fed's, Chairman Powell's press conference was going to take place. So this was coming. I'm like, this is not well. The market's up too high. Let's buy some puts. And so right there, we bought them right there. And sure enough, at 2 o'clock, the puts started rallying because the market started going down. And then at 2:30, right in here, was when Powell started coming out and saying that he was saying, getting more into the details rather than just the Fed announcement, which is just, something that they read off on, and CNBC and Bloomberg and TV and those other ones, they give you the details. And then he comes out with the press conference. That's when the market really started going down and the puts started going up. Well, the next overnight, as the rest of the world got more context, these things just took off. And sure enough, before the close, so we bought them at a specific time. We bought them right here at about 1:30 the day of the Fed's meeting, the Fed's announcement. And we made almost 400% because the next morning I said, before the opening, I said, listen, we're going to sell these right on the opening or right very near the opening. I mean, as soon as we can, as soon as the market's being made, let's sell them. We're not going to get greedy here. 400 points, 400% or almost 400%. Let's take advantage of it. So if you missed it by a couple of minutes, you did see it come back down. Okay, so what? So you only made what? You only made 320%. You still made a huge profit. And look how well that worked. We did not. We sold them all right there, and the market rallied back, and these things just came back down. If we'd waited, we would have lost money. But we didn't. And again, I said specific times. So this is when you should buy it. This is the exact. Now I did this. These were the QQQ. I'm sorry. These were the QQQ options. I apologize. I should have said that before. The February 25 QQQ 335 put option.
Just to confirm here, Matt. So what your markings and everything. Your markings are your entries and your exits that you're posting in the chat room.
Exactly. Go right into the chat room. We have two places. Now we have the chat room that's scrolling all day long. Well, what happens if you're not in front of your screen when that goes by? Well, I missed that. How can I miss that? Well, we also have a second one that says Matt's important comments. I put every single call right in that. So anytime you're away, you want to check in, and you get a little beep, and Rodrigo will tell you, if you can set it up to have a little alarm, boop, gives you a little alarm that tells you I put something in there. Not all of those comments are trades. Usually are, and I don't. Believe me, I do not bombard that separate page. But when there's a couple of, it may not be a trade, there's an important point I want to make, I'll put it in there. And sometimes what I do, because I know I want to do a trade right before the close, and I want people to know in time, because if I do it at 2 minutes before the close, people won't have to, oh my gosh, I gotta put the trade in. So what I'll say it 20 minutes to 20 minutes before the close of the market. This is the trade I'm looking to do, but I'm going to wait right till the close. So set yourself up and do it. And I'm definitely going to do it. And then usually I'll tell you about, almost always I'll say, hey, I did do that trade. So you'll have time. But the point is, we're very specific. And then the next day, long before we sold them, I was like, I'm going to sell these things as soon as the market.
Yeah. And the important thing there, Fernando's asking, what are the times? Well, Monday to Friday. Well, actually, maybe this is a good time, Matt, for me, because I'm getting a lot of questions here from the folks in the email. So maybe it's a good time to maybe just go over these questions really quick.
Great.
All right. So, and these are questions that you guys have emailed me, and Fernando will get to that question because you're not the only one that emailed me that one. But these are questions from you guys, the viewers. So, does Matt Maylie go over the trade ideas from some of the members? Yes, there are. Well, I mean, we'll tell you about that. Snapchat, like there's a lot of great trades that have come from the members. Are the sessions on? Okay, yeah. So there are sessions on Tuesday, and those sessions are with Matt, right? So I believe it's at 11:30 a.m. Eastern every Tuesday, just for the chat members. Does everybody that joined today get a free laptop? Yes, that is correct. You will get a free laptop if you do join today. Let's see. Can this help me trade if I trade crypto, commodities? Yes, Matt does trade those things as well. He was trading gas. Oil. Good question there, Joe. Next question. What is the chat room schedule? It's Monday to Friday, 9 to 5. So the entire day. Is there a money back guarantee? Yes, 7-day money back guarantee. And what is the price at renewal? Price at renewal is the same. So that's some of the questions you guys have sent. But yeah, let's get back here to what we were talking, because you've called the past. I mean, ever since I've been here following your picks for more than a year, Matt, you've called every single mini correction that we've had. But even, the one that we just had right now, when you were talking about, and those that are here and were there, you guys know when Matt was ringing the bell on margin debt, ringing the bell on the Microsoft huge, like dude that was selling, like the CEO or CFO, someone there.
Right.
And I remember all these things, and so it's just really the timing is really great, Matt. 40 years doing this does help a lot. So yeah, I mean, that's just, I just wanted to explain to the folks that those green markings are entries and exits that Matt posted in that chat room that we have.
Right, definitely. And the only thing I would just add is that this thing on Tuesday that Rodrigo mentioned, it's a Zoom call that we do. It's about a half an hour long, and sometimes goes a little bit longer, but half hour long. And initially we thought about doing it more as at least the first part of it be an educational one every week. And I do talk about those things from time to time, but with all the volatility lately, we've kind of gone right into the what's going on in the markets, what's going on in specific stocks, take questions. And we do questions all day long. People ask me, "Hey, I own this." It's not my idea. It's just say, "Hey, I own this stock. What do you think? I own this stock for a long term. What do you think? I own this put option. I own this call option. What do you think?" And every once in a while, I say, something, I don't know the stock at all. The stock on the charts looks neutral. I'm going to be honest. I mean, if I don't have a good answer, I'm not going to fake it. I'm just going to tell you, I just don't know that one. If I say that on an idea that I gave you, then I got problems, right? But if somebody comes in and says, you haven't really talked about this, but this is what I own. What do you think? And some every once in a while, it'll be, I have no opinion. When I say I have no opinion, it's usually because I'm neutral. Or every once in a while, it might be a really small cap stock that I'm not familiar with. And again, if I'm not familiar with it, I'm not going to make it up, steer you the wrong way. So, but let's just going back to this trade that we did that we were talking about. Again, we bought these puts. We made 300% on. So you can see here, February 23rd. This was the 24th. We sold them right at the opening. But the market started rallying right at the close. So right at the opening, the market rallied, which meant the put options fell out of bed. And I'm like, oh, wait a minute now. Even though yesterday I was thinking that the market was way too complacent about this, now they're way too worried about this. I was saying that they're way too. I take that back. I was saying they're way too complacent. We need to buy some puts. Then I said, oh my God, now they're overshooting it here. They just sold it off too much. I said, let's flip it around. So the very next day, so this is the 24th. I mean, that day, later in the morning, we came in and we bought the calls. These again were QQQ, February 25, 332 call options. We bought those at 10:30. After we sold the puts right at the opening, waited for an hour, and then I said, oh my God, this is getting. They're selling it off way too much. Let's get out of it. I didn't get the bottom. I don't pretend that I wish I had bought them here, but I didn't. So just being honest, we bought them here, around 10:30 or actually close to 10:45, and we sold them at 3:30. Again, a 300% gain. Exact times we posted. Now, if I had held on longer than the last 15 minutes, we would have made even more. I'm not perfect. I don't pretend to be. Like I said before, we had some losers. Some people did hold on to it longer. I mean, you're not locked into what I'm saying. Some people probably bought it a little bit later than I did. So maybe they didn't make quite as much, but other people sold it later, so they made more. But the point is, you can make money on both sides. And I'm going to show you in a minute here about what we've done more recently with some trades where we put some hedges on it. We made money on both sides, which is kind of interesting. But again, these are the types of things that we're trying to accomplish and take advantage of all of this. I just already talked about that. Whoops. No, okay. That's not what I want to do. Okay, bang. FXI. Okay, now there's another one we came in that we did, as we moved into April here. Of course, I showed the big one from March that we had in the FXI. We had many others. But bore the heck out of you by giving you. I go back to if I go back to February, I was just trying to get the reason why I wanted to highlight the February one, even though it was several months ago, is because we traded very, very well, very nimbly around a Fed meeting, and we did the same. We have a Fed meeting next week, and I think it's going to be another time we're going to see a lot of volatility. We want to be able to try to take advantage of that. Anyway, again, here's another thing where we made we held it for several days, where we bought the SQQQ call options. This is the inverse ETF on the QQQ, and we bought it here. Well, we lost a little money for a couple of days, but I still felt confident. And sure enough, it took off. We got into the early into midday on the April 7th. We sold them for a nice 200% gain, and right near the top of the day. And you can see if we held on them all day, we would have lost money. Okay, but we didn't. We sold them at a nice profit there. So that's one that's a little bit more recent. But again, using the and then okay. Let me just pull it here. Sorry, fourth. and then the 4th. Okay, yes. Okay. So, and then, again, this was on the so the market went down. This is again another great one. We stay nimble, and I apologize. There we go. Okay, so we held these for several days, but I came in when the market was had got beaten down. And remember, I said I was confident, so I didn't sell the puts. Well, sure enough, we bought some more on the 4th, and a couple of days later, we sold them for 600 and almost a 700% gain on those ones. Now, as we got more, we're getting more into the more recently when we well into this week. Whoops. Okay. So those are some of the ones we made some nice calls on. Now, again, to go into ones that we made just this week. Oops, I'm sorry. Here we are on Monday. I'm sorry, on Monday. See, we had Monday here, and I bought some QQQ puts earlier in the day, but we went later in the day. We added to them very nicely here, and this is April 27th, so we were going out to today. $315 put options. Well, sure enough, they sold off. We actually added a tiny amount to the close, but I thought it would be unfair for me to claim that victory because it was such a small add-on. But anyway, so when we sold them here the next morning, just after 11 o'clock, 100, again, over 100, just about 100%, basically double our money in a day. Now, again, we had some in April before this last week where we lost some money. Again, we don't win on every one, but the whole idea is to have have enough. We want to get. I'm not really showing many of the ones where we make 20% or 30% because we could spend all day showing those. But these are the ones we get enough of these, and it more than makes up for any losses we have along the way. Because nobody bats 1,000. Nobody bats 1,000. Anybody claims they do, run away from them as fast as you can because they're lying through their teeth. But this one was just this week. Okay, now. Another one. Now, this is one I did not take a profit in, but I know some people in the thing did, in the chat room did. These were ones we bought. These are VIX, the May 1835 call options. Okay, and we bought these way back over at the beginning of the month, and they sold off. Some people added some here, so they made it even better. But I knew I was just very confident. This was one that I was, it takes a while. The VIX doesn't respond as quickly as the rest of the stock market. And only once people start to panic. Well, sure enough, again, I've held on to them. We'll see what happens tomorrow. Facebook reported some good earnings, so it looks like the market's going to rally. So the VIX will probably come in. But again, 82%. Again, they're not all 300%. They're not all 500%. We do make a lot of these trades. But here's one where the VIX, that's the fear index. This is one that is a great hedge because they're not as volatile. They tend to hold up a little bit better, but when they move big. And so this is one, again, another one. I must admit, this is when I made the call. This was the high, and some people on the chat room said they sold theirs. I stuck with mine. I don't want to mislead anybody. But again, a nice gain there. And then, boop. Oops, what did I do here? I'm sorry. Just hold on a second. This one, another one. Whoops. Okay. Let me just bring this back up. Sorry about that. Okay. That should. Not sure why this is not. Okay, hold on. Escape again. Let's see if I can. Okay, there we go. Sorry. Okay. That's the, okay. So that was the Q, as I mentioned, this is what I showed you here. We made just over 100%. Then we had the VIX call options. And then we had the SQQQ. I'll blow it up so you can see it better. These were the calls. Now, again, this is actually a negative bet because the SQQQ is an inverse ETF. But again, at the very end of the day, I'd already bought some, but we added some more because I thought the rally was ridiculous. The market sold off, then bounced back. And I said, okay, this is going to be, this just doesn't make any sense to me. And again, we're going to go to the reasons why I think we'll see more volatility shortly. Just, didn't make much difference. It didn't make much sense to me. So we added some there, and sure enough, again, this was Monday. Today, took profits in those. not right at the top, but very close to the top, 200% gain in less than 3 days. Three trade on the third, technically on the third trading day, but you can see it, but on the very end of one day and sold them in the middle of 2 days later. So these are the types of things we've been able to do on a consistent basis. We're not perfect, but these are the kind of trades we're really trying that have worked very well for us very recently. And as I just wanted to make sure you saw that we've been able to do that over time. It's not just been one or two one-off things where FXI, we made $1 gazillion on one of them and $1 gazillion on Viacom a year ago. We're making these calls at a very opportune times. Now, I'm going to show you something here too. See if I can do it again. I don't know why. There we go. Okay, I'm going to go to my screen here. And here we go. AMD. Oops. Now here's one where I didn't make a call. I didn't make a specific call, but an individual stock was Advanced Micro Devices. And, it's a great company. But you can, let me get rid of some of these lines. I'm going to take it here. I'm going to go, what's the date here? 4606. Okay. So see how this stock, this is what I was looking at right here. And I said, look, everybody, this is a great company, but it got, it was not necessarily a meme stock, but it had a nice run and it became very expensive. And, if the tech group, even though, this is a stock to like on a long-term basis, there's a difference between a stock, okay, a company and stock. Stocks of great companies can fall. I mean, like I said, Amazon's changed the world over the last 25 years. And in just the last 10 years, they've had 24 corrections of anywhere from 20 to 60%. Okay. Tesla, we all know about the big corrections in Tesla. Apple Computer last year was the best year for the stock market. And I can share the chart in a minute, but it's like, they had like 6 or 7, 20% corrections, or at least corrections of 15 to 20% or more. And the overall stock market never fell more than 5%. And the best stock out there, one of the best companies out there, Apple, still saw corrections. We want to be able to take advantage of those. This was one we did in Advanced Micro Devices. See how it was key support level? Every time it got down to 100, it bounced, big bounce there, big bounce there, big bounce there. But each one was a little bit smaller. And we call this a symmetrical triangle pattern. And it means that the seller, even though the buyers are stepping in, the sellers are getting more aggressive. Are getting more aggressive. And so we draw it there. That's a symmetrical triangle. And I said, if this thing breaks 100, it's bounced off it so many times, and that's great. But one of these days, and especially because of what's going on in the marketplace with the Fed, with China, Ukraine, inflation, I felt that this thing would break. And sure enough, so let's go back to today. So that's what we're seeing here. This is going to be the same chart, only with today. And I'll have to redraw the line. But here is the line that we had on there. And bang, bang. Look how this thing fell out of bed. When it finally did break, fell out of bed. It's still 16, 17% below its highs, below its highs, below here. So you say, well, geez, we didn't make any money along here. Well, we made some money on both sides. And so there were some people in here in the chat room who made some real nice money on the calls. I was not among them, I do admit, but there were people making bids, making money, and we made some money on these sell-offs. But when it broke here, I did not make a specific call, but I was pounding the table saying this thing breaks 100. And I do know that some people did play the thing and made some. Stock goes down 14%. The options are going up several 100%.
Well, that's the thing. I mean, you know, your commentary also of what's happening. For those of you that don't know or haven't seen Matt, he's always on. They always interview him on CNBC, Bloomberg, Yahoo Finance, all that stuff. And that's why whenever Matt says something, I really think you should listen.
Well, thanks. And I think that's why they had me on. They called me at the last second yesterday when they saw the market was down and said, we need you on CNBC tomorrow morning at 5 a.m. because it's a global show. And I was happy to go on. But here is a very, very similar situation. I did not buy this one, but I know some people did. When I said, whoops, let's get rid of, I'll bring back the 200-day moving average in a second. But here's the one. Let's blow this up so you can see it better. This is the 100-day moving average, okay? You think, well, sometimes, different, it just, is it really important, the 100-day? Well, it is sometimes. Look how it came down to the 100-day moving average, okay, and bounced. It got to it this time, broke below it, retested, couldn't hold, and fell out of bed. Then it came back above it again. But look at this right here. This is what I was looking at this past week. And I was talking about it late last week, and then I was talking about it again on Monday. And I said, look at this thing. It keeps bouncing every single day. It keeps bouncing off that 100-day moving average.
Right.
Big rally here. And then I said, so if it finally breaks it, it's going to fall out of bed. Sure enough, that's what happened yesterday. I said, this stock's going below 900. I must admit, I didn't think it would go below 900 that day, but it did.
Right.
And although I didn't choose it, other people did and make some real nice profits on the Tesla puts.
And just to make sure, so like we do cover, these large cap stocks, but we're doing them in a way, the way we trade them with, weekly expiration calls or puts. So you're talking about, the most this is the most basic type of trade that you can make, buy a call or buy a put. And it's also, it doesn't require you to have a huge account because some contracts we're buying are $1, $1.20 around there. So you're not looking at, $20,000 just to have to make one of Matt's trades.
Yeah.
But we also cover smaller stocks. I remember Mullen Technologies. You and I were covering it live. Of course, you will never, ever hear about this stock on CNBC or Bloomberg, but I got it at 99 cents. I was talking about it here with you guys live. We cover small caps and companies that you will not see on the main news places because they're not above, 1 billion or something like that, whatever the requirement is on CNBC. We cover whatever's out there in the market. And how was that, Matt? Let him know, because we were here, but because we do cover stocks that are like this as well.
Oh, absolutely. And you were the one who came up with it. So I'm not taking any victory laps on this one. You were the one who talked about it, but excuse me here. I'm going to leave the 50-day moving average up, but you can see what happened. The stock's trading, down here. It gets up to 100, or 100. It gets up to $1. It comes back up. We're talking about this thing. Thank you, Rodrigo. You're talking. It's at the 99 cents, and I'm like saying again, that was resistance level. I'm going to get rid of the 50-day moving average. We don't need it. And I said, okay, if it can finally break above that, it's really going to run. Well, that does not look like much of a run, but boom, boom. That's 100% run in how many days? 3 days? 4 days? Well, guess what? The options went up a heck of a lot more than that. So, these are the types of things that we're looking for. And, again, I wish I could get every one of them. And boy, every once in a while you sit there and go, how did I miss that one? But it does happen.
And the most recent one that people are talking about is, and guys, look, I just want you to know, like, I'm very my ear is connected to the retail, right? I talk to thousands of traders. I hear about stocks that you can all sorts of stuff, right? So a lot of recent interest, right, about this one. CTRM, it's some sort of shipment company. What can you tell us about, have you looked into this company? Can you look at the chart? What do you think?
Yeah, we'll talk about the company and the chart, because like I said, there's a difference between the company and the stock. But this is what we have here. Again, these guys are, they are shipping companies. It's interesting because what they do is they when I remember first hearing about it, I'm like, oh, are these one of these companies? It's transportation companies, and they take they have helicopters and stuff and boats that take people out to oil rigs out in the Gulf of Mexico or something. No, that's not what they do. They have the boats, but they loan them out. I mean, people, companies have a certain amount of ships, whether it be oil company, coal company, or any kind of commodities. And but it's just like they don't own all of them. They want to own a certain number, and then they want to. So when they need them, they'll go to a company like Castor, and they'll come out and say, and whether it be I'll rent them for a specific period of time because I know I need a lot of stuff going on, and maybe just a one-off trip, and that's fine. And they also have these ones where they when they have where they basically they just give you a boat, and it's like, okay, this is yours. We're not giving you anything else. You don't have, you want to bring food. You got to be your pilot. You know what I mean? Everything. Here's the boat. Go to it. And it's kind of almost like a rent-a-car. But anyway, but what's going with what has been going on this year with commodities, this has been a huge, and of course the supply chain issues. This has been a great company that people have really become very interested in. And you can see the stock was trading down. Oh, this was a meme stock in the past. Let's go back to, remember when the this company's only been public since 2019, but sorry, I just got this thing. I'm going to move it out of the way so I can see it a little bit better. But you can see how the stock went up to 20, from single digits and from low single digits. Okay. And then, so, when that whole meme stock craze took place back in March, when it really started in March of 2000 and of last year, February, March of 2000, that's when Viacom went up and GameStop and everything else. Then the stock rolled down. But again, look at these moves here. Bounced off its 200-day moving average. Okay, well, is that really? Let me get rid of these moving average. Well, again, boom. Okay, bang. Okay, now that's not much of a move. Well, guess what? It was a 40% move. The stock moves 40% in a short period of time. You know darn well those call options are up several 100%. But you're trying to see how, again, RSI became very oversold. RSI. Now it's starting to come down. I'm a little worried about it near term because people are worried about the economy, and they're worried that hold on. What's wrong here? Let me bring it back up. It's going to take me a second. It won't only take me a second here, but hold on. Let's see. Okay, I'm going to go. Okay, now here's what they call the MACD chart. Now, what the heck is a MACD chart? It's basically it tells you, it's kind of like the golden cross or death cross. And the golden cross is when the 50-day moving average crosses a bunch above the 200-day moving average, and of course the death cross is when the 50-day crosses below the 200-day moving average. Well, the MACD chart, which is down here, that's when you have the 9-day and 12-day moving averages, actually the exponential moving averages. And again, it gives you an idea of what's going on in momentum. The death cross means momentum is going down. Golden cross is momentum going up. Well, a positive cross on a MACD chart means shorter term momentum is getting better, and when it's getting worse. But this thing, so it just saw a recent negative cross. Okay, but look at these other negative crosses. Once it saw its initial thing, it didn't get crushed. So I'm really watching right here to see it got below its 200-day moving average. That's what this purple line is, and I'm just trying to see if we can reverse back up. I feel good about it because I'm not as concerned about the economy. This whole thing with what's going on with China. I can see why people are worried about it. I think the economy will slow, but I'm not worried. Even though the economy will slow, I think it's going to be because of stagflation. Stagflation means higher commodity prices. Real hard assets are going to do well. Hard assets. Guess what you have to do with hard assets? You got to ship them. Okay, so this is going to be one that we want to watch very, very closely because it is given back. It has gone. Okay, let's go back to the RSI chart. Remember, RSI stands for Relative Strength Index. And let's see how it got very overbought. We needed to work off that overbought condition. And even though it had this great run, and again, I'll get rid of these lines. It gets too busy sometimes to look at these lines. Now, again, it doesn't look like, it looks like a good solid rally, but nothing special. But again, that's almost a 50% rally right there. And it got very overbought. Do you really want to chase a stock after it's already gone up 50%? I know some meme stocks did last year, just kept going, but that kind of meme trades don't happen as much anymore. So it got overbought just like it did here, and it went down. But now it's worked off that overbought condition. We don't have to wait for it to get oversold. All we want to do is see this thing trade back up. And here's again, I get real excited about because I love the markets and I'm very passionate about them. But here is what we want to look at here is bang. Now, remember this thing here? Remember, look at this. The $2 level got to that, pulled back. Got very close to that, pulled back. Got very close to it again, or got right up to it, pulled back. Finally broke above it. Now is that a failure? Is this a failure? I don't know. I'm questioning because I like the fundamentals. I'm not going to base everything off technicals. The fundamental picture looks very good. I understand why it's coming down. I understand why people are worried about the economy. I'm more worried about other aspects of the economy than ones that deal in hard assets like commodities, and that's what these guys do. They're not taking cruise passengers. I mean, they're doing iron ore and coal and things like that. So this is where their expertise is. So what I'm going to do. So remember, this is resistance. Okay, it became new support. If we can break back above it again, it's going to run. So I'm looking at the $2 level. So one of two things: either we get a cross back, another positive cross in the MACD chart, or we get it back above $2. It gets back above $2. People are going to say this sell-off was a head fake. And there's people who got short. Let's look at it here. Equity, short interest. Short interest in this stock is not crazy huge. It's big, but it's not as big as some others. But it's still big enough where that if it breaks back above $2, see the short interest there, it's back up well off its lows. It's not crazy high like it was in 2021, but it's still high. Those people are going to those short sellers. People went in when it broke back below $2 because old resistance becomes new support. People said, okay, I'm going to short it. So I bet that short interest is higher than this is telling us, because this short interest was only as of the beginning of April. That was 3 weeks ago. And so that's probably lifted it as the market stocks come down. So it's built up some more short interest. If we get a positive back decross or break above $2, those shorts are going to have to cover. So you got short covering, which is a positioning issue. You got positive break of a resistance level. So you have a technical issue. And then the third thing, I love anything based on commodities right now, hard assets. And so there's three things. So fundamental, technical, positioning. That'll work real well. So I'm not going to jump on board quite yet. We'll look at it even as early as tomorrow. We'll look at it again. But this is a stock that I think is going to see a nice run at some point in the near future. But I'm going to wait until, I'm not just going to guess. I'm going to wait till we get the real signals to tell us it's going to take place.
Right. Okay. That's interesting. And I just wanted to, get a clear example there, because you do review all sorts of stocks, and, it doesn't matter. Obviously we're not looking at, sub penny kind of stuff, but, but this is, within the certain dollar range and stuff. A lot of traders, retail traders, right? That's what they're looking at. Great. So, and also, by the way, so this is, you do options. You're also really good with equities. I mean, that's really, like you've been doing this for 40 years, right? So it's really the same to you, right? But you also have a take on crypto. So this chat room is also a crypto hub for people. If you have questions on Bitcoin, Ethereum, is that correct? And
absolutely. And I mean, one of the things is kind of funny, because crypto it hasn't lost. I would say it's the chatter about it has hold on a second here. I'm gonna do something else before I'm gonna show you something. It's obviously when it was really rallying, everybody was talking about it every day, all day. They're still talking about it a lot, not quite as much. But here it's like, here's the times this is when I get quoted on Bloomberg, the print news, not on their Bloomberg things, and it's like, let's see, right here, say I bring a comment. See, it's a Straight Times, Bitcoin. They ask me about Bitcoin all the time. The alt-ed coins. These are all my things where they're constantly asking me about my opinion on Bitcoin. So I just try to point out that it's not just, I kind of have to do. I kind of do it on the side.
No, they always ask you. And by the way, just a quick shout out here for Jay for joining the Stock Picks Inner Circle chat room. Welcome to the family. Let's go.
Great to have you here, Jay. Thanks for joining. And you can see what we're looking at here, because right now the technicals are really driving this. And I like it on a long-term basis, on a fundamental long-term basis. But short-term people are just trading it off the technicals. I'm afraid it is what it is. But and that's okay. There's nothing wrong with that, because there's still a lot of people who don't really understand stand it the way maybe they should. Gosh, my thing froze up here a little bit, but hold on, let me see if I can get that. Anyway, I could talk about it while my okay, on my screen hopefully will unfreeze. But the point of the matter is that so many people are fighting this thing. I mean, it is an important part of the future. One of the things that I really focus on is the fact that so many people in Congress are buying it. I mean, and they have to publicly say it. And some of them, let's face it, we've all heard about these stories lately about what some of these congressmen and congresswomen have done. It's just appalling what they've been able to do with some of their inside information. But my concern a couple of years ago was when it really, the first time it got up to 50,000 before it pulled back, and I was like, the government's they're going to put a lot of restrictions on this. And they did talk about it, and then sure enough, we did see some serious pullbacks in Bitcoin, as we've had all along. But then all of a sudden, I started hearing all these people in Congress buying it, and buying decent amounts of it. I was like, these guys aren't buying it because they know whether there's going to be a lot of regulation on it or not, and they wouldn't be buying it as much as they do if there is going to be a lot of restriction. Doesn't mean it's going to be something where it's going to skyrocket in the next week or next month, but long term, some very important people with very good ties are buying this thing. We always want to look at the insiders, and those are kind of the insiders, right? One of my best calls last year was telling people to get out of Microsoft. Great company, but the insiders were selling it hand over fist in a major way. And sure enough, the stock's down. Well, it bounced back a little bit today, but it's still down about 20%. And the CEO saved himself $75 million by selling back at Thanksgiving. And I saw that, and I was just like, pay attention to what the insiders are doing. Anyway, I kind of got off on a tangent there. I apologize. But what we're looking for here is this whole higher high, higher low thing. We had a horrible, tough time at the end of last year, and we can go into why that happened. It had a lot to do with institutions who didn't own enough of it, and they just said, I gotta sell this thing. I don't want it on it's not doing well. It's not big enough my portfolio, and a lot of these tech stocks are rallying. I'm going to sell my Bitcoin and buy tech stocks, and that's what they did. And so, but it did go into the beginning of the year. Now it's stabilized, so I really like that. Here was really not good because it had lower highs and lower lows. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. It finally changed. We finally got a higher high here. This gave me a lot of. So what happens next? Then we got a higher low. The next one didn't give us a higher high. So I got a little nervous there, but it came back down with a higher low. So that was good. Higher high. And now we're looking at, and again, it's pulling back. That's okay, because we're looking at this on a long-term basis. What we got to make sure, if it breaks below 35,000, we're gonna have some. That's gonna be a negative signal for us. But I really like it. And the thing that you use a stop out level, and let's use it. That's a bar charts. Let me look. Oops, I'm sorry. This is a chart that just shows the closing prices, and you can see how important 35,000. If we close below 35,000, it's going to be, of course, they only close for a short time each day, but they close below 35,000. That's going to be a big warning flag. Again, not that it's going to crash to 15,000 or 20,000 or anything like that, but it will probably, if it breaks that, probably go down and test 30,000 again. You can see how important that level is. I think this is where you back up the truck again if it gets down to 30,000.
Right.
So again, I Bitcoin. I'm in it. Talk about it frequently, and I'll talk about it, and I'm always looking at it. So anybody in the chat room wants to ask me about it, I'm on top of it and can answer the question immediately.
Right, and just for everybody to know, basically, Matt, since we're the focus is to trade the volatility, we're very, very active around Fed meetings, earnings seasons, and just market volatility in general. Whenever everybody's panicking, I'm telling you, Matt is in there buying puts. Like a lot of, and here's the thing, because I talk to so many traders throughout the day, and I talk to two types of traders. There's a trader that is just sitting on the sidelines or just hoping for a rally, and then there's the other trader that is able to learned right how to trade options with a group or with the right strategy, like along with Matt, and they've been able to make more money on the actual correction than they had on the entire bullish trend. And that's something that is kind of amazing, that you could spend a whole year on a bull market losing money, and then in 3 months, 4 months of shorting, you're able to make more than you ever did on a bull market. So that's just impressive.
And again, we have the tools to do it now. We just didn't have those before. So that's which makes it so enticing right now. I mean, this is something that hedge funds have been able to do for a long time. I mean, a lot of people have read the Big Short. Well, I mean, unless you were running tens of millions of dollars, and you went to Goldman Sachs to do one of these trades, you had several $100 million or even billions of dollars under management. Sure, we'll do that trade for you because we'll make some money. If you go in with, you could go in there with $1 million, and that's not big enough for them. It's like $1 million. Come on, yeah. It's just because the margins are small on those kind of esoteric trades. They only do them with the big institutions, and that's why they were able to make a lot of money when the Big Short, when the global financial crisis hit. They were able to make money. Well, nowadays, those weekly options didn't exist back then, and the ones that, I don't think they existed at all. And even if they did, they weren't trading. They weren't trading even in 2018 when we had the deep correction of 19% in the S&P and a little over 20 in the Nasdaq, which was, of course, the last time the Fed. Excuse me, I'm petting my dog who just came in here. But so in 2018, yes, they existed, but they weren't as liquid as they are today. I mean, the QQQs trade on over 100. There's days they trade over 100 million shares. You never have to worry about getting in and out of the index ETFs. If you want to trade Apple, you want to trade any kind of these weekly options, and it doesn't have to be major stocks like Apple. Most stocks, even medium-sized stocks, have weekly options that are quite liquid. And when they're not, and the ones that are not, I pointed out, I go, hey guys, this is a screaming buy or this is a screaming short, but the options just don't trade well. You can't buy them. Or like the bid ask spread is so wide that it's not, you're not worth it. But was it great? You bought a lot of calls. Now the stock's gone up. But they're so illiquid that you had to sell the calls all the way back down. You didn't make any money because there was nobody around to buy them. They weren't liquid enough. We've definitely had a couple of those ideas where I got all excited about one and then realized, oh shoot, they don't really have any options. Especially some of these smaller names that we don't follow as closely as we would on the big ones. But the point is that the other point is very important to make. I should have made this right early on, was that when we're talking about so much in 2021, so many individual traders were like, hey, I want to find the next meme stock, the next stock that nobody's heard of that's going to change the world. Now, believe me, we're always looking for those, and when we see them, we want to point them out. However, with these options, with these weekly options in the big cap names and the medium-sized names, with these 3 times a week options in the index ETFs, for instance, when that hedge I put on earlier this week when I bought some calls on the QQQ to hedge my bigger position in the puts, I only had to go out one day because they have options that expire Monday, Wednesday, Friday in the QQQ. Same with the SPY, the S&P ETF. But again, it's those things are there, and you can't. Those individual traders, because you have advanced micro devices, which we just talked about. It's $100 stock. Micron. Amazon's tough. It's a $3,000 stock. Of course, they're going to split. When they do split, those options are going to be much, much easier to trade because they're much more. You buy one option, it's very expensive right now, but you're going to be able to do that. But the point is, you can play and make big money on these moves. It can be a big cap name. It can even be a General Electric. It can be a Chevron, big bank stocks, JP Morgan, Bank of America. We have made some nice money in these options in these individual names that are big cap names. You think, well, the most JP Morgan is going to go up is 10%, over the next several months. I'm looking for the one that's going to give me the big juice. Well, in the options market, they will, even though it may only move 10 or 15%, maybe move 15% over 6 months or 3 months, it will see big 3 to 5% moves over just a few days. And if you're buying the weekly options, that means you can make 100%, 200%, or 50% very, very quickly in stocks that are incredibly.
Right.
So I guess my point is, we too many individual investors are concentrated too much on little penny stocks where they think that why not get the companies? You don't have to worry about going out of business next week.
Right. You don't have to trade companies that are going bankrupt to make that kind of money in case on a dream kind of. Yeah. And I didn't know that really until, you started, since we started this chat room last year, just seeing the progress. And like whoever made that 14,000%, whoever that, I'm going to tell you guys, I know 2 users there. I'm not going to give out their username, obviously, for obvious reasons, but several people made over 100 grand on that FXI trade. And quick question here from somebody there on the chat. So someone's asking if you provide any trades for swing traders there, or is it just for day traders, Matt?
No. We like to. In fact, I'd like to do more of that in the swing trading because that's really where. In my institutional side of things, I've been talking. One of the reasons, just very briefly, for those who don't know me, I spent 25 years. I've been 40 years in the business. or be 40 years in November. The first 25 years, I was on 2 trading desks. Solomon Brothers trading desk for 15 years. Back in the day, back in the 80s, well, 70s, 80s, and 90s. I was there in the 80s and 90s for 15 years. It was the most important trading desk in the world. I mean, Goldman was a great trading desk and the biggest firm, but because they were much bigger in the more in the investment banking side of things. But Solomon Brothers was the king of traders, and the CEO, John Goodfriend, was called the King of Wall Street back in the day, and back in the early 90s. And we just saw everything, and I covered the biggest trading desks on Wall Street, the biggest mutual funds, Fidelity, the biggest hedge fund, BlackRock, but also other big institutional players, the smartest guys out there, and insurance companies, other money managers, endowment funds, etc. And so I really learned what not what should trade, not the theoretical stuff about what should happen now. I mean, it's one of the things that the people have been, I think, on the chat room have been very complimentary of me. They were fighting me, and I just, when the market was rallying, and they were like, "Oh, this sell-off's over," and I'm saying, "No. You're looking at, you got to look at this way. We're going to see a retest of those lows, which we have seen. I think we'll even see an undercut of those before long." But the point is, the theoretical stuff is great. That's what most strategists do. They're usually, economists and stuff like that. I worked on a trading desk. You have to know what's going to happen, not what theoretically should happen. And so that's what's given me, the credibility that I have. I get votes from research votes from some of the most important. I was on Bloomberg TV several months ago, and the next day I got a call from a person, and she was Carl Icahn's assistant. Said Carl Icahn saw me on Bloomberg, wanted to talk to me. I was like, what? And sure enough, they called me back, and I said, well, I'm available wherever he wants. Well, less than half an hour later, they called. I was on. I chatted for, I don't know, close to an hour with him, but he and his son. So the point is that I look at things in a much different way. Again, there's a lot of guests on CNBC that are paid to be bullish. That's their job. They're running for, they work for a money manager. They want people to be bullish. They're working for a brokerage firm, and they don't, we all know, I'm sure you've all heard that the percentage of sell recommendations on Wall Street are a joke. I mean, they're way less than 10%. If you have a hold rating, that's really a sell rating. I mean, they have huge percentage of buys, massive percentage of holds, and literally a minuscule number of sell, because they don't want their customers getting mad at them. Why are you putting a sell? I own that stock. You just put a sell hold on it. I'm not paying you anymore. I'm not doing any more business with you. It's just the way it works. I'm sorry. These guys are well-intentioned people, and they're not, and they are right, because long-term markets do go up, but they always go up over time. Sure, even during the 1930s, of course, you had a big crash and then another crash 7 years later, but the markets over time, they go higher. And so that's what they do. But I'm here, again, going back to the point, I'm sorry, swing trading. So when I talk to these people, these institutional players, they don't care about day trading. Okay, they don't care at all about day trading. They care about swing. I mean, some of them are just all buy and hold. I love this thing. I'm going to buy it. I'm going to own it for 3 years. That's great. But a lot of them, well, especially some of these hedge funds, they'll be swing trading, and what we define, swing trading is shorter term trades, but not day trading over several days. And that's where I really I need to spend more time on this in the chat room, because it's really something that again is, you could get bigger gains. I mean, when we get these moves, you just have to be a little more patient sometimes. I mean, I've showed a couple too where the option went down for a day or two and then rallied back strongly. But yeah, I mean, I'm going to give you a great thing right here. I'm going to show you. I'm going to go back to my little presentation, but let's see if I'm going to find something here. Whoops. Okay. Sorry, just take me 2 seconds, but I just want to give you an idea of what I do in terms of these. I know what I want to do. Where we do all these big, where is it? Oh, shoot. I'm sorry here, but I show you what the kind of swing trading that works, that I really try to concentrate on. I apologize. I can just see a little bit better without my glasses here. Let's see here. And gosh darn it. Is that icon? No. Okay. Nope. Oh gosh, I apologize. You just give me 2 more seconds because it's really important talking about swing trading. Okay, there we go. Okay, I apologize. Now this thing is a little bit old. It stops in last year, but we've been able to make some really nice trades in it over the time. Now this is what we did talking about swing trading. Okay, here we go. I love the energy stocks. Everybody hated the energy stocks in 2020. I started pounding the table. People told me I was nuts. It's like, what are you talking about? Nobody cares about oil. Nobody, we're in an election year. We're getting away from fossil fuels. And I was just like, okay, let's look at the fundamentals. Fossil fuels, we cannot move away from them for a decade from now. I knew the EIA, the Energy International, IEA, International Energy Association, they're saying demand for fossil fuels a decade from now will be just as high as it was, or within 5% of what it was before 2019, because we don't have the ability. We don't have the ability to get those other alternative energies that quickly. It's going to take decades, at least 2 decades. And even if I'm wrong, it's going to be 1 decade. So to say that we're just going to walk away from the energy sector is crazy in my mind. So that was the fundamental side of it. The technical side of it was that it was ridiculously oversold. Crude oil was ridiculously oversold. Even went to negative territory, if you remember that. It was underowned. The mutual fund holders that barely owned anything in the group. And then it was like down to 2%. They owned nothing. And then because it underperformed for so long, and then they were worried that it was going to continue to underperform because everybody wanted to get away from fossil fuels. And then of course the sentiment, everybody was short. I mean, not another part of positioning. Everybody was short, but sentiment was also very, very, very bearish.
Yeah, I remember that everybody was hating oil, and you were, and that's the thing. You guys haven't been doing these sessions with Matt Maylie for over a year like I have. So it's hard for me to but I try to do my best to recap you like those moments that really made me like, damn, this guy's good. Like when he's calling every correction on time and literally telling all his members, hey guys, I would put some cash aside. I foresee a correction in the near term future. And literally for the past, every single one of them, he's been on point. This man does not miss. And that's really the accuracy is really just, hey, do this for 40 years at the highest level, as chief market strategist, director of trading. You were managing BlackRock and Fidelity, 2 of the biggest accounts in the world, right, Matt? So, there's a lot of experience that you bring to the table. And I just hope that, whoever, if you're new starting, like this is the best thing out there for you, because, the only other choice that I hope you don't do is to go try figure out on yourself and blow up your account, which is so common for traders. And look, I know because I talk to thousands of traders throughout the day, all around the world, So I'm telling you, like, this is what I talk to people with. And it's just great to see that, you can help them with all this stuff, Matt. And you trade around all these events that are happening around, because my understanding is that you analyze, you're an analyst, but you look at the global markets, not just the US. So you're able to to profit from different things that are happening in the world that we can trade here in the US, right?
Right. That's what we're, and like I said, we did the Chinese ETF, the China stock market ETF right now. And I'm going to show you in a second, the dollar is getting incredibly overbought and incredibly extended. So fundamentally, it should continue to move higher, but it's about to get hit, in my opinion, at some point in the next few days. Maybe not until early next week, but I'll go over that. But in fact, I'll go there right now. But just to go back to this one thing, just with the oil, you talk about swing trades. I said everybody should buy it here. It went down a little bit and then shot up. And everybody was saying, see this dip here? That's the end. It's just a big head fake. And I said, no, we got a positive. We have a golden cross here. Instead of selling it, double down. And sure enough, it went a lot higher. But when its RSI got incredibly overbought, I went to the technicals. I said, let's take profits. And now these are swing. These were a couple of months in each one, but many times when we get to here again, let's buy some put options. And that's the thing. I said, let's take some profits. Let's cut our position in half and buy some put options on the XLE Energy ETF. Okay, we went back to a full position here. Didn't buy the calls, but it went down a little bit and then shot up. Same thing, but puts. Sorry, took some profits and bought some puts. And here we were a little late, didn't get the bottom, but you can see we went back to a full position and it rallied. Now again, this only goes back to the end of the end of 2000. End of last year. It doesn't go all the way out to the present time, but it made a couple of great calls on that. When oil got to 130,
this is not even the update. Like oil went way even higher, right?
Right here. I'll show you here. Let's go back to my Bloomberg, my live page. What's wrong here? Okay, there we go. Okay, now CL1 commodity. When crude oil, see when it got up to 130, see how overbought it got on its RSI chart, its relative strength chart. It was also another thing. Let's get rid of that. Another chart called the Bollinger Bands chart. And what that measures is when the stock or any asset, in this case commodity, gets more than 2 standard deviations above its 20-day moving average. Or in the case, if you have to look at the weekly chart, it's a 20-week moving average. But the point is that tells you that it's getting really extended one way or the other, either very overbought or very oversold on a short-term basis. Now look at this here. See how overbought? This is the Bollinger Band chart. Let me take these down so you can see it better.
A quick question here from Joseph Newhall in the chat. Shout out. And so Morden, yeah, that's the answer for Morden, who was asking about, if you do swing trades or not. And Joseph Newhall in the YouTube chat asking, how long are you typically swing trading? Because we all know you do the day trading and the 1, 2, 3 day trading, the short term. But how about that swing trade?
Well, to be honest with you, because of the huge volatility lately, we've done less of it, and simply because you have to have your stops, right? I mean, if you want something you think it's going to happen over the next couple of weeks, the next several weeks on a swing trade, and then it moves so far in the other direction against you, it's hard to maintain that trade. And that's, we've seen these wild moves. And even though the market's been going down, there's been unbelievable rallies in the stock market. However, I do think, right here, look at this one here, where I was saying it got to 150. See that Bollinger Bands? It got way above its top end of its Bollinger Bands chart. I said, we got to sell the energy stocks. Because I've been bullish on it for so long, but we got to take profits in these names. And you want to look at maybe buying some put options that go out a couple of weeks in the XOP or the XLE ETFs. And these things came down very, very nicely. Now, this was something that I wanted to hold on. I thought about holding on to, negative bet, holding on to for more weeks, but it came down so far, so fast. I said, again, let's get out. That's the beauty of being a nimble trader. When things sometimes happen faster than you expect them to, what do? Just keep, it's going to go further. You hope that it goes further. Take your profits and run. Don't get greedy.
And so basically, right. So Matt covers the short-term trading. We're talking about, buying calls and puts, short-term, near-term expiration, swing trading as well. And you can ask Matt also, hey, Matt, look, I want to buy a stock and I want to hold it for 10 years. Where can I start looking, or what are some ideas? There's no limit. Guys, like, there's a lot of people that join here for education. There's a lot of people that join here for day trading. There's a lot of people that join because, they follow Matt, that he's been around for a while. But, people also, like his investment approach. Keep in mind, Matt has been talking about commodities like for way before all this stuff happened. And
I turned bullish on the commodity sector in June of 2020. Now, I wasn't at the exact bottom. The exact bottom, of course, came at the depths of the pandemic in March of 2020. But I turned wildly bullish on that when nobody was talking about it. And believe me, you can ask Brian Sullivan on CNBC. He'll tell you the same, because he's an oil guy, and that's why he has me on a lot. He enjoys my work, and as he called my work a must read. So anyway, but you talk about the long term. I mean, look at Disney here. Now, not many things are am I gonna wait until it gets as oversold as it did? This is the weekly chart, the weekly relative strength index chart. It got ridiculously oversold in March of 2020. not many stocks are going to get as oversold as they did at that time, especially a stock like Disney, a tech stock or a meme stock. They can get ridiculously oversold. But Disney's, it's not. This got oversold because of a very unique situation. So, but it's starting to get down to that level, okay, where it's getting quite oversold, getting a decent discount to its 200-week moving average. And we'll look at the Bollinger Bands chart. And so again, it's like at some point soon, everybody's saying, well, look at the streaming companies. They're just, they're horrible. I'm like, well, Disney's a hell of a lot more than just a streaming company. Netflix, it's a streaming company. That's what they do. That's all they do for most part. And Disney has all these other things. I do think, the problems they have. So I guess my point is, I'll talk about, I just happen to pick Disney. The other one, of course, is Facebook now, or Meta, what they call it now, Metaverse, whatever. Now this stock is up. The last I saw was up about 13 or 14% in aftermarket trading after they reported their earnings. But here it is. And I've been saying for a while, it's like, buy this stock every month. By at some point every month between now and the end of the year, because 2023 is going to be a great year. I'm all, going front. So those are the types, and we could talk about that, and I'll go into detail if you'd like. But see how oversold it had become. Now it's going to bounce back tomorrow, but I don't see it really taking off yet. Now look at this here. Now look at this here. This is the 200-week moving average. See, 200-week moving average got right up to that before, it's and it sold off. Now, right now it's trading. Last I heard it was trading just a little over 200. It gets up to 230. I don't know if it'll get that high. If it does, man, I'm going to be doing some swing trades on the bearish side of things and some short-term trades. Again, this is a weekly chart, so it's not going to be. If it gets to that, it's going to not necessarily roll over immediately. I mean, the next few days, so it won't be a day trading play, but it'll be one that we've got to prove. Now, having said that, I want to remain nimble. It's like, oh my God, I think it's, I'm assuming it's going to be oversold when it gets back up to that level. If it gets back to that level and it's overbought, we'll make a negative bet. If it's not, okay, then we'll be looking, if it's not overbought and then it looks like it really break out, well, then you really want to jump on the bandwagon because it's going to go a lot higher. One of these days, this stock, and I think next year, boy, it's going to go above its 200-week moving average. And that's going to be day trading, swing trading. This company, the death has been this. Mark Zuckerberg is one smart cookie. He's thrown out he's doing the things. He's doing what Jeff Bezos has done for 25 years. He's like, I'm willing to. I don't care about the stock over the next year. I care about it over the long term, and that's what Jeff Bezos did several times along the way, where he said, I don't care if we make money. You don't like it, sell the stock. We're doing what we're doing because we're looking at the long term. Not many CEOs can do that. Bezos did, and I think Zuckerberg can.
Right. And Boris Pitts in the YouTube chat. This is my first time tuning in. Great show. I'm glad you're enjoying this, Boris. Matt Maylie's definitely the GOAT. If you haven't heard of him, now you have. He's amazing, and he does this every day there in the chat room. So. And for those that are asking, yes, Matt will pick the contract. He's been doing this long enough where he will look at an options chain and he just he knows what he's looking at. He'll pick the contract. It'll be, but mostly it's short term, Matt. So yeah, we've talked about trade ideas, and someone's asking also if you provide if there's some sort of educational resources or things like that you can provide to them. Or that you do in the chat room if somebody has
Yeah, one of the things, and I know you and I, Rodrigo, have talked about is putting some things, and especially on the technical analysis side. And when things will calm down soon, at some point soon, and when those Tuesday morning calls, I like to start off with a 10 or 15-minute tutorial about anything. It can be about risk management. It can be about certain technical analysis, sentiment, etc. I mean, it's correlations is another big thing. I mean, one of the things where I've made some nice money was using lumber as a good correlation for the building stocks, the Home Depots and the Lowe's of the world. Doesn't work perfectly, but some people, it's like, oh gosh, I never thought of that. Well,
so this is institutional level research because I mean, you this is what you do. This is you're an analyst, right? So they're basically getting, as a retail trader, you're basically talking to the head honcho there, right? Matt Maylie, the brains behind it, and you're able to trade with him. And I'll tell you, man, I'd pay a lot more, man, to trade with somebody like Matt. I'll tell you that.
Well, I mean, and that's the thing is we're trying to make educated decisions here, not guesses. It's nothing's perfect. Nobody bats 1,000. But it's just, especially when you come to some of the stuff you hear, it's so. I mean, there again, not to use any names, but there was a guy on TV yesterday, and he's talking about there's no, doesn't think we'll get a washout move. Well, there is an outside chance we won't get a washout move, but it's going to be very, very difficult because this guy's never been on a trading desk. He's always been an analyst, and it's like with the amounts of leverage in the system. I mean, it's as one, well, again, I won't go into the name of the firm, but a very, very big institutional firm. And he said, the reason why I listen to you, Matt, is that, when the markets are going up, I don't really need analysts. The market's going down. Everybody's just telling me the same thing. They're telling me the market, don't worry. And it's just, you tell me the truth, and that's what I need. And I'm telling you, if you don't understand how the market really works and how the positioning and the things called, remember, I don't know if anybody heard about with a gamma, positive gamma, negative gamma, and how those can affect the market on a short-term basis, and even for a couple of weeks. Now, that's very important. And there are things, dynamic hedging and things that I don't have to teach it to you. I just say, I can explain it to you and say, this is why the market will probably go higher here, or this is why the tech group will probably go higher here, or will go lower, whatever happens to be. There's just the stuff that they come. I mean, it makes intellectual sense, and so they just go with it, even though it's completely wrong. I know people talking about how lower oil prices, that's got to be positive. That's got to be positive for the airlines. Well, sometimes it is, but frequently it isn't, because most airlines hedge their energy, their jet fuel costs. Number one, and number two, if jet fuel prices are going down, doesn't happen now, but usually means demand is down. That means fewer people are going to be flying. That's not good for the airlines. So lower oil prices are not good for the airlines sometimes. Right now, it will be good because it's a supply-driven situation rather than a demand-driven one. And we can go into that. We should really take a few minutes just to talk about my view on the world, why I'm worried about the markets, but again, worried about the markets. But I think it's healthy. It's normal to have these kind of moves, but we're going to see some decent sized moves the rest of this year, and we want to be able to take advantage of them because we are facing some headwinds, and too many people don't understand what is going on in the last couple of years, and therefore have missed what's going on now. If you don't mind, I'm just going to kind of go into that and just, there's issues going on. The biggest, the most important thing, and if you've heard it a million times, don't fight the Fed. And then, of course, when the market bounced a little bit a couple of weeks ago, people were saying, don't fear the Fed. It's just ridiculous. I mean, when the Fed is tightening, it always, I'll tell you, always, I don't care what they say on TV, it always leads to a correction, a deep correction in the stock market. So I do agree, sometimes it takes a while. 2006, 2007, it took over a year. But when the market's very expensive, like it was at the beginning of the year, it tends to happen much quicker. And that's why this correction has started much more quickly. But the point of the matter is that too many people, don't understand, especially even though these guys are on Wall Street, they get paid a lot of money to be analysts. And this gal, Kathy Wood, she's a very hardworking person, and she's done very, very, very well. But she doesn't seem to understand that the amount of liquidity provided by the Fed took the stock market, and especially a lot of the stocks that she owns, much far above their underlying fundamentals. And therefore they have to come back down. They have to come back down more than they already have. And and the thing is, because the Fed kept emergency levels of stimulus long past the emergency had ended. And so that liquidity had no place for a while. It just went into the economy. It helped the economy regain its momentum, because it actually got basically shut down. But all of a sudden, it's like, okay, the economy's moving fine. Well, these banks, what are we going to do with the money now? We're loan it out? Okay, well, we'll put it into the marketplace. And that's what pushed a lot of these stocks higher. Then we had the momentum and et cetera. So I guess my point is, now that that's changed, the Fed has gone from emergency, historically massive levels of liquidity they were going to go down to kind of go to neutral, but the inflation took off and they had to go, they couldn't stop at neutral. They got to go from massive amounts of liquidity to tightening. Okay. And now they're going to be more aggressive with the tightening because of that, what's going on with the, with inflation. You can't have your cake and eat it too. You can't have high valuations. The high valuations were driven by lower interest rates. Well, guess what? Interest rates have moved up a lot. Okay. Well, they're still low on a historical basis. Doesn't matter. The economy is running on the basis of that interest rates are below 1%. They're not below 1% anymore. Okay. So the market has to readjust. We've heard in the last couple of days, the market is revaluing itself. It's repricing itself for these. Yeah. Well, I've been saying that for 6 months. It had to happen. Okay. And the problem is the whole thing with the Ukraine that is exacerbating everything because oil prices are going to stay high. The Ukraine has come in and said, hey, I'm sorry, Russia has come in and said, we are going to now in a war of attrition. They thought they'd come in and just take it over immediately. That's not going to happen. They're not going to turn tail and run. They are going to do a war of attrition. That means those sanctions are going to be on for a long time. That means oil is not going to flow out of Russia the way it had in the past. It's still going to flow, but it's not the way it was. Same with natural gas. Same with food. Okay, with the breadbasket of Europe, the food prices and energy prices are going to stay high. Not only that, it's got major problems for the supply chain issues. Everybody thought those supply chain issues would be done by the end of last year. But then as we got into the second half of last year, we realized, it's going to go into 2022. Well, now, even before the war started, it's going to go even longer. well, now it's going to go through through this year. What does that mean? That means inflation, this war that everybody stopped talking about suddenly. And I understand why, because not as many people are dying right now. And that's great on the humanitarian side, but it's not good on an economic side. Okay, inflation is going to stay high. It raises the odds that we will have stagflation. And stagflation is not good for any assets. Take that back. It's not good for either bonds or stocks. It's only good for hard assets. And then, of course, we have the situation going on with China, and that's going to slow some growth, et cetera. The other thing I'll just talk about is that, since October of last year, all of Wall Street has cut their GDP forecast for the economy by half, more than half in most cases. Right? And yet they haven't cut their S&P 500 earnings estimates at all. It doesn't compute. That doesn't make any sense. These earnings are going to have to come down. So
Right.
This is normal. It's healthy. Let's take advantage of it. Don't fear it. Don't fight it. Don't fight the Fed. Don't fight what's going on right now. Embrace it. Take advantage of it. And then when the market really gets its teeth kicked in, we'll be the ones who are buying while everybody else is panicking.
Yeah, and that's the thing that you're able to make these. Calls or puts does not matter, right? There's always things happen. Moves always moving in the market. Money's always moving in the market. So that's good that you can make money on either way. Matt, let me ask you. So let's say China lockdowns, right? And that stops a lot of that can impact our GDP here, right? So let's say purposely or not on purposely, that can tilt us into a recession. Do you think? If that happens, of course, you're going to be trading it and doing very well. I'm going to add in the chat room, but as far as what's going to happen with the markets, as far as what will happen there, and what do you think how that will end, pretty much?
Well, the whole thing is that, again, the market got pushed too far for artificial purposes. Now, I'm going to say something I can't prove it, so I'm going to. This is exact it was a greater degree back then. It's not as big a bubble, but in the late 1990s, people don't understand what happened. They just thought that everybody got so excited about tech stocks. What really happened was that the Fed and other global central banks, behind the scenes, they didn't have a QE program. Behind the scenes, they went in and they supplied huge amounts of liquidity to the marketplace. Why? Because of Y2K. And those who were too young don't know what Y2K was, is that all the computers were set so what was 1992, 93, 94. You just put the two numbers, 92. And when it got to 00, the computers would not be seeing 2000. It would go back to 1900. And we're talking major chaos if that had happened. Now, this is something they discovered 6-7 years in advance, and they did spend billions of dollars to fix it, and they were able to fix it. But during that process, the global central banks flooded the system with liquidity so that people wouldn't go to the bank worried about getting their banks, because, oh my gosh, the bank's going to think it's 1900 and my money's going to disappear. So I've got to take it out now. So this is what they did. I mean, again, I can't prove it the way you can with QE and balance sheets that you can in the past, but this is what I was understanding at the time, and I've heard since. And of course, so I guess my point is, it was no coincidence that 2 months after the January 1st, 2000, when they realized, okay, it was fixed in time, so they pulled the liquidity and the market crashed. Okay, the market went up because of too much liquidity when it wasn't needed for education. It wasn't needed for economic reasons. It was needed because of this technological issue. They wanted to avoid a panic and for people withdrawing money out of the banking system. And they also needed the money to fix the problem. And believe me, there's people in the chat room who said, yeah, I worked at a bank, and they said they put their best people on it, worked on it for several years. They got it done. It worked well. But it supplied, we had the same thing this time. It was nothing to do with the economy. It had the pandemic. The economy shut down, went to zero. It basically halted. They had to do something to hold up the economy together. They held the markets together. They flooded the system with liquidity, and asset prices went up. That's the situation we're looking at right now. I was still rambling on here, but my point is that back in 1999, people thought it was because they were so smart. They didn't realize it was this excess liquidity. The same thing happened last year, and luckily it wasn't the same kind of ridiculous valuations. These companies, it was a gazillion companies in 1999 that were worthless. They had no prospects. They were never going to make any money. Now you have stocks like Nvidia got way too high. Micron got way too high. Microsoft got way too high. But these are great companies. They're not going to go out of business. They have great revenues, great profits. It's just they got too far ahead of themselves. They have to come back down. So I don't want to get too caught up in that, but it's just because people are so, they get too narrowly focused. And I've been lucky enough to work on the trading side and on the analytical side that I've been able to see it. And that's why a guy like Carl Icahn called me up and said, what do you think? That's just, I'll leave it at that. But the point is, we're going to have we're going to continue to have volatility. We're going to have to work through this. And the Fed is going to support some things, and they want to keep it a relatively gradual decline. But I do think they realize what they're doing is, they're not stupid. They know that tightening is going to cause problems for the market. They talk about soft landings, but they know that almost never happens. In 1994, they point to that one time, and even then, it wasn't as soft as, and certainly it wasn't as soft as that they try to portray. It was a tough time for the banks. That's for damn sure. A lot of some of the banks really got in big trouble. And what they did is they steepened the yield curves so they could ride the yield curve. And again, I'm starting to ramble a little bit too much here, but the point is that these are kind of normal. These are normal. Oh, geez, there's my dog, Sammy. Relax. These are normal. It's just been because of all the liquidity the Fed had spent in the last 12 years. We haven't had much. We had it in 2018, and then of course the pandemic in 2020. But they usually happen every couple of years. Let's embrace it. Let's let it go. The Fed knows this is the right thing. They know it's going to be painful. I mean, Paul Volcker knew what he was doing, and he got crucified for it, okay, when he tightened and the economy fell into recession, the stock market went down. But you know something? A few years later, he was revered, and now he's thought of as one of maybe the greatest all-time Fed chairman ever. And Powell's looking at the same thing. You've heard him speaking publicly about how great Volcker was. They need to do this stuff to get inflation under control, get that froth that was in the market under control, and let's take advantage of it. Instead of fighting it like so many people are doing right now, let's embrace it and use that volatility to our advantage.
Right, and the interesting thing is that you apply this to all sorts of stocks, and to trade the option and crypto as well. So it's very interesting to get all that background. So you're looking at Facebook, Netflix, Google, all reporting. I mean, I'm not saying they were horrible, but some of them missed in some parts. So what is this telling you about the consumer? Because this is a consumer-based economy, right? So
yeah, that's the biggest concern for me, is that people are taking what's going on with the consumer and saying that Well, the consumer's still doing well, and the consumer is doing well. There's no question.
By the way, C. Jenkins has let Matt know that his quote unquote rambling is actually very valuable because it gives inside view of how the markets actually work. So yeah, Matt does give great explanations and details on everything. Absolutely. C.
Great.
Jenkins.
Thank you. But so let's go back a little bit further. Okay. I'm sorry, I got sidetracked here. There's something on the dial. We'll talk about that in a second. But the to answer your question, Rodrigo, is what's going on here? What does it all mean? Facebook's or Meta's, whatever, Facebook's numbers were good. And so the stock is higher, but for the most part, again, this is a stock that's already down 47%. Okay, and so it's going to bounce back. Yeah, great. This is not great for it doesn't mean the consumer is going to be so good. But going back to what consumer is doing, is that they had this huge amount of pent up demand. I don't know if I've flown twice in the last month. I couldn't believe what the cost does, what they're charging, and businesses that they could just write it off, but it's just like, oh my gosh! I mean, to take your kid to no wonder Disneyland's having a tough time. But the thing is, people are paying it, and Disneyland, like Disney World and Disneyland, are jammed these vacation weeks. Like last week was a vacation week in the public schools. It's just unbelievable, and people have all this pent up demand because we had another winter. It wasn't as bad as the previous one, but it was still a tough one. And people said, I need to get out. Well, what are they going to do? Because they made these plans months ago, and they said, heck with it. I know maybe I can't afford as well as I thought I could, but I'm still going. Okay. What is going to happen when we get into the middle of the summer and people are making plans for later? When their food, their grocery store costs have doubled, the cost over $100 to fill their gas tank, and things like that. They're going to go. People keep talking about the consumer's in great shape. Well, that's great because that all counts. That counts number one, the stock prices and their home prices. That's great, but you can't sell your home. The place to live. You can say, well, geez, I need a few extra bucks to pay for my food bill this month. You got to sell your house. Okay. You've got to hold back somewhere else. And they're going to say, oh my gosh, how much of that consumer spending that is kept strong in the last couple of months, is that just pent up demand? Because everybody talks about the balance sheets being so great. That's fine. Savings rate has gone back down. Savings rate is back down to pre-pandemic levels. I don't care what they say on the financial news networks. That is what has happened. Net worth is still high because everybody's houses have gone up in big way. But the problem is that again, it's just talking about that these inflation is going to keep people from, I believe, it's going to keep people from spending the same way they had more recently. They realized the economy is going down, and it's like, okay, we went on that vacation. We did get the house on Cape Cod for the summer, but boy, after that, we're going to have to. We got to make sure that maybe Christmas we're not going to go anywhere. We're going to stay at home, and maybe we're going to go out to dinner a lot less often than we used to. And maybe the mom and dad are not going to pay for the babysitter to go out quite as often as they used to, and that's going to have an impact. This thing about how the consumer is doing as well, and I guess it goes down to the other thing is that we're now at 64%. At least that's my understanding. 64% of Americans live paycheck to paycheck. Okay, so there's a lot of people with some nice money, but 64%. How are they going to do? What's their spending going to be like if this inflation stays up, which it definitely looks like it's going to. So I don't want to sound overly, again, this is going to create a great opportunity. But we know that the Fed put is no longer where it used to be. So they know that they're going to cause some pain. They want to do it gradually because they don't want all this leverage to kind of wind all at once. But we are going to be moving lower this year. I think it's going to be a very tough year. And then another thing, I just say presidential election years. You say, well, you hear about all these states have all this extra money from the fiscal spending plans, to roads and bridges and stuff. Why aren't they spending it? Why? Because They want to win the election in 2024. They know they can't win in 2022. It's called the presidential election cycle. What they do is a new president comes in and they make a few changes because that got them reelected, and then they put in the projects that will really help the economy, and they back end load them. They always do that. I hate to say it, they don't care about the midterm elections. That's just not what they do. They don't care. They claim they care, but they don't. Okay, so they go in and they say, okay, even if they pass the legislation for all these big spending bills that are going to improve the economy, it's like they want the money to be spent in the third year of the election cycle. Okay, so that's when the economy really starts picking up. And then it lasts and then you spend more money in the fourth year, and things are really humming in that fourth year. That's what they all do. Democrat, Republican. Trump he didn't get reelected. Trump front end loaded everything. He put all the tax breaks right at the beginning, and look what happened. Again, who knew there was going to be a pandemic? But he front loaded everything, and so the economy wasn't doing as well as like. No, there's a lot of other reasons why he lost, but just look at, there's so many. I mean, some of these guys are very uninspiring people that got reelected, but they tend to get reelected because that's what they do. It's called the president. It's not. We hear all these different things. Oh, April should be a good month. In the market, of course, that didn't work this year, but it's just guessing. It's a bunch of baloney. It's just a bunch of trivia. The presidential election cycle is not trivia. It is a specific thing. The first year, the first 2 years tend to be bad years for the stock market, especially the first year, not always. But the second year, the third year tends to be better, and then the fourth year even better, so they can get reelected. Okay, and they don't care about the midterm elections. They just care about carrying the White House. That's the most important thing for them. And so that's what we're seeing this year. We're seeing what's going on now, and as bad. And believe me, people forget how bad things were for certain presidents when in the middle of their first. Ronald Reagan in 1982 was not doing well. I mean, not that he was doing as badly as Biden is or Trump was in the middle of his term, but he was not doing well, and he got won by a landslide a few years later. Joe Biden can be a little bit tougher for him because he doesn't seem to. Well, I'm not going to get to that, but the Democrats can still win, and if the economy's doing better, and that's what they're doing. I mean, again, that's another reason to think they're purposely holding off spending this infrastructure spending because they want it to really they'll really start implementing it towards the end of this year. It'll really get going next year. The economy will be improving, and in 2024 it'll really be humming. And then the Democrats will actually have a chance of holding the White House, even if it's not Joe Biden. But again, these are the types of things we need to look at. Too many people are just looking at the narrow stuff, and that's, again, why I think I've been able to make some real good calls at key turning points, whether it be in oil prices last year or the bank stocks last year. This year, when I turned negative on the tech area and the semiconductors, and made a good call there. It's better for the swing trades. But that's what we're really trying to do, because we have, again, I keep harping back to it, but we have the tools to take advantage of it in both directions. And we just, as I showed you earlier on, we made the money in the QQQ puts in both directions in 3 days. I mean, again, that doesn't happen all the time, but we want to be able to take advantage of that. It happens. And it's so hard. I cannot tell you how many times I've had some really smart people on the institutional side of things, and then they say, I really love this group, and I say, well, that's great, but you shouldn't be chasing it right here. And then again, this guy is buying for 3 years out. I'm like, but don't chase me. Just these stocks are going to come back down. Don't worry. He goes, what do you mean? And he goes through all the different bullish aspects of the fundamental call. And I'm like, yep, you're right on all of those things. However, it's incredibly overbought. The sentiment is ridiculously ridiculously bullish, and everybody, the futures traders, are all loaded to the gills in the futures of that. Maybe be energy futures, whatever, oil futures. It's like there's nobody left to buy. It cannot. That's what I said when oil was about $130 this year, and they're like going, "Wait a minute, Matt, you were the first guy to turn bullish on oil. Now you're saying don't buy it." I'm like, I'm saying I like it longer term. I'm saying don't chase it. It's going to come back down. Sure enough, it did, because even though the fundamentals look really good and still do, doesn't mean they can't see it. And again, I go back to that thing, the example of Amazon changed the world. The stock is up 18 gazillion %. Okay, but guess what happened in 2000? Their 2001, their earnings went through the roof. All right, their revenues went way through the roof. Earnings through the roof. Stock went down 90% because there's different things going on. You got to look at everything, and that's what I try to do. And here's just the thing here. I'm again rambling a little bit because I love to talk about the markets. Let's talk about the Red Sox. I'll really drive you crazy. Or the Patriots. But look at here. Here's the dollar. Okay, look how it's getting to that. Okay, here's the weekly. The weekly RSI. Look how overbought it's getting. It's the most overbought. Now, it can get more overbought. We saw that get more overbought way back here in 2015. But see how overbought it's getting? Okay. I don't have the Bollinger Bands chart. I can pull that up too. But now, look at it's about to see a golden cross on its weekly chart. Yeah, but look what happened the last time. Well, it didn't really do anything. Not everything goes up when they get a golden cross. Not everything goes down when they get a death cross. So I'm going to take away those moving averages. But you see here, this is key. Now, can it break here? All the fundamentals tell you can, but look how stretched it is. Let's go to the Bollinger Bands. Again, remember what the Bollinger Bands are? We take the 20 period moving average. In this case, so it's not 200, 20. In this case, it's the 200 week moving average because we're using the weekly chart. Let's go Bollinger Bands, and you take and the upper line is the 2 standard deviations above that 20 week. Okay, and I'm going to pull it back down here so you can zoom in so you can see a little bit better. But see how much it's above that? Let me get rid of this line so you can see it a little bit better. But again, the purple line is 2 standard deviations above its 20-week moving average. The yellow greenish line is 2 standard deviations below its 20-week moving average. It is way above that, just like it did. Now it did it for 2 weeks. Now maybe we get another week next week where it's like that. But the dollar is going to come back down. It's just, and I think it's going higher. Everybody's scared about China, Europe, emerging markets. Everybody wants to put their money into. I understand, that's true. Everybody wants to go put their money in dollar-backed assets. But I'm telling you, this dollar, you mark my words, the dollar is going to get hit at some point in the next couple of, maybe even tomorrow, but in the next week or so, it's going to get hit hard. And those who are, and we're going to look at some things. And one of my choices, in fact, to buy the UDN, which is the that goes that is the inverse thing that goes up when the dollar goes down. That's the ETF for the bearish dollar. Anyway, but let's move on here. Now we get today is my 31st anniversary, so I've got about a half an hour left. So I really want to talk about a couple of things that I think look like good opportunities, and then about a half an hour. And I'm going to go out with my bride for dinner. I want to talk about some stocks that I look at because we got that Fed meeting coming next week, and some of the stocks that look really enticing. I mean, a lot of the stocks I've talked about have been short ideas, and you've heard me kind of talk negatively on the market. But boy, if this, the market right now, the futures are trading higher because of the positive Facebook numbers. We got Amazon and Apple tomorrow. Let's see what happens after that. But people are worried about what the Fed's going to do. And the last time we had the Fed meeting, it sold off going into the meeting, and then saw it actually bounced when they raised rates. So what we have is like you've heard the thing, the term. People they buy the rumor, sell the news, and what that means is there's a rumor around about some good news, and everybody hears about it, so they all buy them, and finally it's such an obvious rumor that when they actually get the news, they sell off. There's just nobody left to buy. The opposite happens when the rumor is a negative one, and you have to sell the rumor, buy the news. And in this case, if it's a negative, it's happened when the Fed first raised interest rates. They put that 50 basis point thing on the table, saying, "Well, we might raise it 50 basis points." So the market went down, 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 and then all of a sudden they announced, "We're going 25 basis points. It was better than expected." There's nobody left to sell. The market bounced for several days and bounced strongly. We might see a very similar thing this time around. Now, again, if the market holds up, it'll be a different view. We'll see what happens tomorrow with Apple's numbers and Amazon's numbers, et cetera. But that's tomorrow after the close. But if we get that similar sell-off, and because they put 75 basis points on the table, now, nobody's really expecting that, but they're expecting a hawkish tone. And if they do anything that's dovish, even if it's in line, even if they don't say anything dovish, as long as it's not more hawkish, which is going to be hard to achieve, again, everybody will have already sold and you'll probably get a bounce. And we want to be able to take advantage of that. Here's some of the stocks I'm going to look at. And again, I'm not looking at those this week, but next week. And we'll be talking about this in the chat room next week in a big way. Advanced micro devices. Remember, I talked about that, how I made a great call saying if it breaks below 100, but look at the stock's getting oversold, okay? And look how much has come down. And I was bearish on the stock a couple of weeks ago. It's a great company, so I'm not going to stay bearish forever. I'll tell you that for sure. There are some companies you say, "Oh my God, they're a fraud," so I'm going to, I'm always going to be bearish on them. That's fine. That's very hard. Again, even the greatest companies, like I said, Apple Computer. Look at all the corrections it saw last year. It's the best stock in an unbelievably bullish market. It still saw, I think, a half a dozen pullbacks of 10% or more. Anyway, so there, let's go to the weekly relative strength index, RSI chart. Boom. See, it's not quite there, but it's getting pretty oversold. So my thinking is that these are the stocks we want to look at that have gotten beaten up the worst. Are you going to go buy, if the market is going up, okay, now, of course, Apple is down, but it's held up so much better than so many other stocks. I mean, it's getting oversold. It'll probably be a good a buy. If the stock is down when the Fed makes their decision next week, but it's not going to bounce as much as some of the ones that are really just flushed out and people are short them. So there's a lot of short interest. There's not a lot of short interest in Apple Computer right now. I guarantee you that. So you're not going to get that big impetus, but you are going to get some of these ones like Advanced Micro Devices or a PayPal or a Peloton. There's Netflix. What about Netflix? I mean, my goodness, I'm not a big fan of Netflix on a intermediate term basis. Can they fix it? I think there's a good chance that they can. But on a short term basis for a day trade or a swing trade, I mean, look at this. Look how oversold this thing is. Look at this RSI, 16. It's like it was down here. Well, guess what? This stock made a low and then it made a lower low. It still acted like crap, but it still saw, let's go on the percentage basis. It still saw, bang, a nice 30% rally in 2 weeks. We're going to get a similar type of rally in that stock soon. And one of the impetus for that is going to be, I'm not ready to pull the trigger yet, but one of the catalysts for that could be a buy the news rule. Look at this. Look at this. It's below 20 on its weekly RSI. I wonder if it's ever been below 20. Let's just look on its weekly. Back in 2000, you got to go back to 2011 when it got below 30. And I don't think it was, I bet it didn't get below 20. Let's see here. It's very close. It got to, it didn't even get below 20. It got to 22, okay? This is the most oversold the stock has ever been on its weekly chart. Now, that's a weekly chart. That's, so it doesn't mean it's going to bounce tomorrow. But boy, if this market's flat on its back, if this stock is flat on its back next Tuesday, I'm going to be looking to buy the stock for swing trade, maybe buy some options for the call options for a 2 or 3 week move, and certainly some shorter term options for a nice pop in the stock. Not there yet. This is something we'll be talking in the chat room next week. I mean, again, just look at this. This is not, they're not going out of business. People still like Netflix. Look at that. That's just let's look at the, let's see here. Bang, GP, bang. So this is just just using the closing prices. Okay. And look at that. It's just straight down. Okay. You think that when the stock bounces, you think that Apple's going to bounce more than this stock? Not a chance. Not a chance. I'm not saying don't. Believe me, we want to be buying Apple as well. Don't get me wrong. But here's the one where you're really going to get the extra bang for your buck. These ones that are washed out. Some of these other stocks, again, you don't have to go for these stocks that nobody's ever heard of, or to get these big, meme stocks, or go into the chat room where somebody's just trying to pump and dump you. I mean, where they like 10,000 people in the chat room, and some guy from a hedge fund gets in there and buys a bunch of stock and then talks it up so he can sell it to you at a higher price. This is one where it's very liquid. You don't have to play that stupid game. We look at I mentioned AMD is one washed out. Peloton, PayPal. Netflix, okay, because I wrote some down here. JP Morgan. JP Morgan, is there a better bank in the world? There's not. Well, no, I shouldn't say that. It's an incredibly good bank. Bank of America is incredibly well run as well. Citigroup, Wells Fargo, I think got some problems. But Citigroup is trying to turn things around. Maybe the new CEO, who seems very impressive, so maybe she can indeed turn things around. I feel good about her chances. But again, look at this. This stock, it's a great company, but look how much it's down. Look how oversold it is. Let's look at its weekly RSI chart. See, it's right down. Now, it's not as oversold as it was. Let me get rid of these. Okay, let's see. Let me get rid of a couple of moving averages. The purple line is the 200-day moving average, which is something that people tend to look at very closely. But it did break below that. That's a concern, but it's getting oversold. Now, it's not as oversold as it was in March, but that was when the whole global economy had shut down. So it's probably not going to get that oversold. And yet, look at this. It got bought, and it saw a very nice, strong rally there. Again, it may not look like much, but that rally is bang, bang, 13%. Okay, you make 13% in 2 or 3 weeks, you should be happy. That's a nice, again, and if you're buying options, call options, you're going to make, multiple hundreds of percent, and you only have a week or two. But it's getting to that level, and it's below. So if it can regain its 200-day moving average, it's gonna see a real nice rally over just a week or two. And so again, it's a $120 stock. Look at Bank of America, same thing. It's not quite as oversold, but great management team, just a great company. And again, it's getting see how oversold it was there. Oversold each time was a short-term bounce, and same thing over here. I mean, oops, I have to move this. I have a screen that you can't tell I see, but see that bounce there, got oversold, bounce there. See these things? There's strong correlations, and we can make, again, that's for a couple of weeks. We can make some money off those trades, and it doesn't have to be just day trading. We can make them over several days and even a couple of weeks. Now let's look at the weekly, and I'm going to go back to why I mentioned Bank of America. Not quite as oversold on a weekly basis, but getting there, okay? But the reason I highlight this is a $36 stock, okay? So how much does it options cost? Okay, let's look at this. Well, let's go out until next week, next Friday. Okay, you can buy some a little bit out of the money. You can buy a 36.50. That's only 25 cents higher. I mean, and it's less than $1. So at some point, this is going to be an unbelievable buy in the call options. If you want to go out a couple of weeks, you don't have to go that high. Again, you only have to go out. What's the stock trade? You go out to 38. 38 is 50 cents. I mean, these are cheap stock. These are cheap options, even with the VIX elevated recently. So again, you don't have to buy these names that nobody's heard of to make some good money on some short-term trades when you have a couple of catalysts. You have a stock that's oversold. You have a great company. You have a great management team. You got great prospects. So the fundamental side is covered. I mentioned the technicals getting oversold. What's going to happen with the yield curve? Can the yield curve widen a little bit? In other words, when the yield could widen, steepen is really the word I want to use. When it steepens, that's positive for the banks. And there's again, I can bore you with why I think that could happen on a short-term basis. These are all going to be positive for the stock. So let's take advantage of it. You don't have to buy a meme stock to do it. Now, also with the energy stocks, they've been beaten up. Were beaten up. They bounced back a little bit today. Devon Energy is one of my favorites. You see how this thing, we're looking at the 50-day moving average. See how the 50-day moving average, remember, old support becomes new resistance. Old resistance becomes new support. Well, it was old support, held it, broke below it slightly, but bounced back, broke below it slightly, bounced back. This is what it's doing now. It looks like it's going to do the same thing it did in January. We're just looking at this year's chart. Last year, it did dip a little bit further than that and got all the way down to the 100-day, but that still didn't last very long. But look what's happened this year. Okay, each time it got down to the 50, even got a little below it, but bounced back quickly. This one is bouncing back quickly. If it can break above that 50-day moving average, it is going to run to 65 again. And in my opinion, go a lot higher because I think it's a great company, and I'm bullish on the energy stocks. I'm bullish on commodities and energy overall. And believe me, I totally agree. We need to get away from fossil fuels, but we have to look at the real world. We cannot do that in the next 5 years. We can't. I mean, unless somebody comes up with something that nobody realizes they're working on. But everything that's out there, it's going to take a lot longer. The fossil fuels, and a lot of these companies are making the transition to cleaner energy, and so
right.
Right. Anyway, so those are some of the things we'll be looking at next week. This week I'll be looking at Apple and Amazon, and then in the QQQ options for the next couple of days. We only have 2 days left in the week. And the next week, these are stocks: AMD, Netflix, Bank of America, JP Morgan, Devon Energy, etc. So we're going to have a lot of stocks to look at, and none of those are reporting next week. Those are all stocks that have already reported. We'll have stocks that are reporting next week that we can look at as well.
Nice, interesting. There's definitely a lot to come in the chat room. I know today is an important day for you. So right now, Matt, I know how are you doing with time there?
Like I said, we still got about 20 minutes left, so
Okay.
People can throw some. What we frequently do when we ask for this is if you guys throw some things into the chat that Rodrigo can look at, and while you're doing that, we'll start with one, and we always like to start with one of the big ones, and of course Tesla is one that I think a lot of people care about. We'll look at that. We'll look at Facebook as well because they report earnings tonight. But so Rodrigo, you want to go ahead and I don't just tell them what they want to do, or
Yeah, we got Mary with Palo Alto Networks.
oh, okay. What's the symbol? Is it PR a P?
I think it's Alto. I don't know. Is it?
Oh, Palo Alto. Okay, yeah. PNW. Okay, yeah. P. Oops. Yeah, PANW. That's what I thought. Okay, sorry about that. Okay, now look at this stock. It's here. I mean, great stock. Look how it went down to its 200-day moving average and bounced nicely. Series of higher highs and higher lows. Got a little bit of a lower low here. That got me a little nervous. And it came back down here. Now, this was such a key level. This is why I'm going to get rid of some of these. I'm going to give one of these moving averages. And again, this is what we talk about. All people ask me every day. What do we think of this? What do you think of that? So on a technical basis, look at this stock here. It held. It did not make a lower low. Okay, that was key. Made a little bit of a lower high, didn't follow it with a lower low, and it held its 200-day moving average. That was really good. Then it made a higher high, another higher low, another higher high. Looks like it's trying to make another higher low again. That's bullish. And it's holding its 200-day, I'm sorry, it's 50-day moving average. That's the yellow line. The purple line is the 200-day. That's a 50-day. See how it's 3 days, 4 days in a row now. It's dipped a little bit below and held it. That's good. Let's see if it can break it back above 600. That's going to be very bullish. And also, it's worked off its overbought condition, which is great. It's not oversold, but that's okay. Look how many times it's bounced without reaching an oversold condition. And let's look at one other thing here. And okay, see now it did have a negative MACD cross, but that was 3 weeks ago. It hasn't curled back up yet, but it certainly will. So my point is, if you want to buy the stock here, I think it's fine. And the thing is, you do know that its recent lows, which is right here at about 570, you want to use that as your stop. Okay, if it gets below 570, if it gets 50 cents below, that's okay. But it gets percent below, then just bail.
Right.
Just drop it, move out, and look for another entry point, which will come because it's a good company.
And just for everybody to know, right? So as we are going over tickers and this is why we do this exercise at the end, because we go over tickers from the chat, we review them with Matt, and if there's a couple or more in particular that Matt likes, he's like, hey, we'll follow up with this in the chat room. And we've had several big winners, and these are trades that come from right now that we are literally like asking you guys. So so that
depends, so I could write them down. Sorry.
Right. Okay, cool. All right. And then we have interesting. Then we have Libya there on the YouTube chat with Google.
Okay. Google today, now it's probably indicated a little bit higher because the whole market's looking higher. This is such a good company. And it's oversold. Excuse me. The problem is that it broke below, and again, on a technical basis, look at it's got. Oops, I'm sorry here. It's a great company, and my nephew works there. He absolutely loves it. He just started there well, it wasn't this year, but then I think it was like within the last 6 months, and he just loves it. But if we see here, forget about the moving averages. Let's get rid of those. See how we had here. This is what they call a descending triangle pattern. And so it broke below that level. And today, after its earnings, after its disappointing earnings, it broke below that in a meaningful way. Again, you always want to be careful about if a mile, if something breaks very slightly below a support level, by a few pennies, that's not a break. You got to, you need at least usually about 2% before you really get on a.
Hey Matt, really quick here. Just want to give a shout out there to Martin. Martin, welcome here to the family, to the chat room here with Matt. Let's go, Matt.
Thanks, Martin. Thanks for joining. Can't wait to be working with you. But here, see how it broke below that. It's meaningfully below that. That's kind of a broken stock because it's such a good company. But look at the other thing here. Again, we're looking at, and remember, technical analysis is based on fundamentals. Don't listen to those people try to tell you it's just a bunch of lines drawn on a chart. And the reason why I say that, and I'll go very briefly, is to say that when a company makes a decision to do something, again, I'll just very quickly just say, a company, things have been going tough for a while. Their stock's down, their business is down. They've laid off people, they've closed plants, and all of a sudden things turn up. Okay. And then they're going to be all of a sudden, for whatever reason, the economy turns better. Maybe it's just their product. They've got a new product that's going to do really well. Are you going to wait around? I mean, these hedge funds and mutual funds, they have armies of analysts, and they find this out. They go to the company, they go to the company's customers, they go to the company's suppliers, and they're all saying, hey, things are turning around for them. Well, their earnings aren't going to turn around immediately because they've got to hire a bunch of more people. They've got to hire those people back, or new people. They've got to train those people. They've got to reopen their factories. That takes time to retool their factories. So they're going to sit there and say, they're going to go to their portfolio manager, these analysts, and say, don't wait. This company's turning around. Buy it now. Don't wait for their earnings to get better 9 months from now or a year from now. Buy it now. And so that's why those who are individual investors who aren't involved, who don't have that army of analysts, they can see, hey, this stock's moving up. What the heck's going on? I can buy it now. So again, it is fundamentally based. And we've always heard that the market moves, or the 6 months in front of the economy, stocks move 6 months in front of them in either direction, 6 months in front of their earnings. It's all that's what really technical analysis is based on. It's just not just a bunch of crazy lines. But here, it broke below. You're going all the way back to the March lows, the pandemic lows of March 2020, and it's broken well below that line. Okay, and as I mentioned, below made a key lower low below that symmetrical triangle pattern. I'm sorry, descending triangle pattern, not a symmetrical. A descending triangle pattern. This is a broken stock. However, it's getting oversold, so it's probably going to bounce tomorrow. But what I'm going to be looking for, if it gets back up to 2,500, even though I like it on a long-term basis, I'm concerned about the market overall. This old support is going to become new resistance, and we'll actually be looking to make some negative bets. If you want to, on a short-term basis, though, this stock, because it's oversold on its RSI chart. Let's look at the weekly RSI. And there's again, I look at the MACD charts. It's not as oversold as it was, but again, that was March 2020 when everything was oversold. So this thing could turn back up. I like it here but it's a short-term swing trade type of thing. But look at it next week. I guess my point is, you can nibble a little bit here, but if it falls further between now and the Fed situation, and the market really gets washed out, and this stock gets more oversold, like it was back in March of 2020, boy, that's going to be a great opportunity to buy the stock. So, and of course, it's a great company with great prospects. The only reason why I don't like it is why I didn't like it here. It's because the technical breakdown and the stock is still expensive on a historical basis.
Okay, all right, good stuff there. And then we have Ram Kadas with AMC.
AMC, one of the big meme stocks. Okay. Oh, my dog's getting excited again. Okay. So we know what's been going on there. The stock is it gets these jumps on a meme basis every once in a while. I'm not a believer. They are changing. GameStop was the other one. I do own a small number of shares, small position on GameStop, not an AMC. So I do not own any AMC. I just worry that, again, we'll look at the chart here, but we'll talk about the fundamentals in a second. But you can see here, it's just kind of dead money, and it just gets these pops every once in a while on a trading basis. I don't see it. If it saw a positive MACD cross, remember that's what the 9-day moving average moving above the 12-day, then you would want to get it. But you might as well wait. You won't get the exact bottom, but it'll give you a lot more confidence to buy it. You see a positive MACD cross. Otherwise, I just don't see them. I see them as a $15 stock. It's probably not going to lose a lot of money, and I do think they're doing a lot of nice things. But to get the big home runs that we've seen in the last year or two, a couple of different rallies here, not year or two, the last year, we see this big rally there, and the big rally there, and the big rally there, and the big rally there. We'll probably get another one along there, but I'm going to wait until that may happen tomorrow. It may happen in a couple of weeks. I'm going to look for that positive MACD cross before I make that bet.
All right. Okay, interesting there. Now, let's see what else we have here. Let me go over a couple other ones in the YouTube chat. Ben, we went over AMD earlier in the video. Fiona, Pretz Supel, look, SoFi.
Oh yeah. Okay, now this one's starting to look enticing again for this thing. Gosh, the thing is, I'm worried. I'm worried for myself of being too cautious about between now and the Fed meeting that we'll see lower lows, and I'm worried that I'm going to miss a call. But here is a stock, and let's go back. Let's just look at a little bit longer term. It's just kind of flat on its back. And I'm going to look at something. Let's just kind of talking on my mind here. It doesn't make any money yet, but that's okay. It's still, it's a good business. I think it's a good business. But let's look at the bang. You see, again, the company hasn't been public for very long, but it's the most oversold it's ever been. And it just seems to me it's going to be one of these stocks, again, these washed out names, that when we get the next big bounce, which right now, and again, I could change my mind if something happens between now and we have the weekend coming up, but if we're still sitting here on Monday and Tuesday and this stock's down flat in its back, this is going to be one that I think could do very, very well. But we want to look at it. I'm going to write that down for next week. Could do very well. One of these washed out names that could do very well. And when the market sees when the broad market sees a bounce, and people, again, sure, they're going to buy the Apple computers of the world, but a lot of these fast money momentum players are going to look for these. There's a lot. If you think it's all fast money guys in chat rooms, I'm telling you, the amount of institutional money that is in these have their algorithms all set, and these stocks, they're going to sit there and go, what are the washed out stocks? What are the ones that are really washed out? Great, we'll buy Apple, but we're going to buy Peloton. We're going to buy Plantier. We're going to buy we're going to buy a stock like SoFi. So next week that could be a real good potential, because I think in the next rally, this one, these algos, these ones that are institutional money, that's a lot of money in those things. Can give the kind of stock, the bounce that will, it may not last many months, but it will certainly last. And again, $6 stock, you could get a real nice move in that one. So $6 stocks, those are the ones we're looking at. It's next week we're going to take a hard look at that one.
Okay. All right. And Ram Kadas, a couple folks here asking about a firm.
Oops. Okay. Again, here's another one. Look at this. It's a company that a lot of people like on a fundamental basis, as do I. But the thing is, like, well, what's wrong? What's going to be something wrong with the company? Again, it's hard to look at the charts because the stock hasn't been public for very long, just over a year. So, but that doesn't matter. It's like, again, the stock is, it's flat on its back. People like the business that they're doing, and there's others that are washed out. But what I'm looking at right now, what I'll be looking at is if it's washed out and starts to turn up, you want to buy stock. And we'll kind of finish up with this, because this kind of, I think, an important point for those who are doing swing trades, not just buying options for a short-term basis. But we might be buying options for a couple of weeks out. But if you're just buying the stock overall, you look at this thing, you buy the stock here at $29, and then it goes if it can break above its 50-day moving average, you add to it. Too many people sit there and go, oh, I should have bought more when it was lower and I missed it. I'm just going to let it go. It's like, do not be afraid to add to again. Well, I'm drawing it here, but it would also take it above its trend line going back, right? But this is the type of thing. Why not add? Professionals add money to stocks all the time. Why wouldn't you do the same thing? As you can see, I put the trend line on there. See, it's right on its trend line. If it breaks above, it's going to be well above its trend line, above its 50-day moving average. It's going to run. So you buy it at 29 and you buy it at 39. Your average is $34. Okay, the stock's trading at 39. Your average is 34. You can't lose. You just put a stop level at 34. It goes below 34. It goes to 34. You sell and you get out flat. Okay. Now, of course, it could gap lower on an opening. You can lose a little money, but and then what happens if the stock continues to rally? Then you just raise your stop out level. Then you're guaranteed a profit. These people who go in and say, there's nothing wrong with scaling down a little bit, but if you're swing trading and you buy a stock for just for a couple of weeks or even a couple of months, and you buy a stock and it goes down 0.5%. Oh, I still like it. Great, that's fine. Down 1% is fine. You go down, if it goes down 10%, you get out of that stock. And just think about it though. Let's say you don't. Let's say you double down. Let's say you buy it at 39 and it goes to 29. Okay, just the opposite of what we see here. Right? You buy it at 39, then you double down at 29. Now your average price is 34, but the stock's trading at 29. You've just doubled down on a loser. Now you're just relying on hope to get you back to even. That's not trading. That's not swing trading. Swing trading is just the opposite. You do not scale that. You can scale down a little bit, but once it gets to a level, get out. It doesn't mean it's a wrong trade. It just means you've timed it wrong. Look for another entry point. Cut your losses. Let your winners run. I cannot tell you how important, especially this year, if we get a big washout move, which they tend to happen in the fall. We'll see what happens. The real big one that really gives us a bottom of the market. But whenever that happens, when you make some good purchases, do not be afraid. What happens is the people who panicked said, oh my God, I wish I had sold. And then when the market bounces 5%, they say, okay, thank God, it bounced a little bit, I'm going to sell. And you're the one who's buying because you can't lose. You buy Apple at X, Y, and you buy a little bit more, you buy a little bit more. Then you just keep whatever your cost is, and then you move your stop out level, the level where you're going to sell the stock and take the profit, maybe to a profitable level. You can't lose. I mean, I don't want to say you can't lose because, again, every once in a while, a stock opens down 50% or something because there's some scandal or something. But you are all but guaranteed a profit. There's nothing wrong with chasing stocks that you like. They're acting well. They're making higher highs and higher lows, etc. Do not be afraid to keep buying them. Oh my gosh, I want to be able to say my cost was 25. I want to be able to say my cost was 25 when it's trading at 75. It's like, well, you want to make more money or do you want to be able to brag about it? Some percentage thing. You'll make more money if you keep adding to the thing as the stock goes up. So keep that in mind if and when we get a big washout later this year. And because the people who did that in 2009 and kept buying in 2010 and 2011 made a fortune. The people who bought in 2009 and said, geez, I wish I had bought more, never bought anymore, didn't do anywhere near as well. So that's right. That's just, I think it's an important rule for swing trading and for long-term investing as well.
Yeah, absolutely. Huge shout out here to Chief Market Strategist Matt Maylie. Let's go. Thanks a lot, man, for being here with us. I appreciate your, all the time here, Matt, that you do. Lead trader, right, at the Stock Picks Inner Circle chat room all day, Monday to Friday. With so many amazing people there, like Mary, so many great folks there inside the chat room. Matt, thanks a lot. I think you have somewhere to be now. So appreciate you, my friend.
Anniversary, and I'm a very lucky guy. I'm looking forward to it. But I hope you'll stay on. I know Rodrigo's got a few more comments to make and tell you more about the details and show you the chat room itself and stuff. And thanks for those who have joined. Others, I hope you'll consider about it because I think, especially with a 1 week trial period between now and next week, I think there's going to be a lot of things going on with this Fed meeting coming up. So it's going to be an exciting time. Thanks a lot, and good luck with everything. We'll see you on the website, the chat room.
All right, sounds good. Thanks a lot, Matt. Thank you, my friend.
Thanks, Rodrigo. We'll talk to you soon.
All right, we'll do. We'll do. Guys, I'm only going to stay here for a couple more minutes. Make sure you sign up while we are live on the stream so that you can take advantage of this. It will expire at midnight. I don't know if we will have laptops by then. So I do think there's like 6 more available from what I understand. But if you see one on the checkout, it means we do have at that particular moment. And everybody that does sign up will get a special prize valued at $400. But you have to email Rodrigo at benzinga.com if you want it. Um, so yeah, so yeah, make sure you email or call. The link to join Matt's chat room is in the chat room. Okay, in the chat, YouTube chat, and on the Zoom chat, on both places. Now, remember we were talking about that FXI trade that Matt made, like 14,000%, something like that there with FXI, the Chinese tech ETF, something like that. Well, I showed you guys earlier, but for you guys again to see, it's Matt ideas. Yeah, it's a lot more than a chat room. It's a live trading room because you get Matt's commentaries, setups, updates, entries, exits. So let's go. And he discusses a whole lot of themes there, including what you saw today. That's nothing. He'll give his commentary on what's happening, which is so valuable to me, really. All right, so here you go. Right, this is the sell alert. So entries and exits. This is the sell alert. Matt Maylie. It is sure hard not to take profit on FXI calls. I'm gonna sell half of my position, and that was about like 2,500% gain. And then he sold the rest of them the day after, 10 a.m. And I think they were, and you could see. So the rest of them were sold when it was like I think 7 or 8,000%, and the other ones were doing. Several of the folks made about much more than that. So those contracts went through the roof. But again, guys, I'm showing you right there where it was so that you can actually see. I mean, you'll see it right here. This was the entry right there, 332. Pull up a chart, my friend, and look it for yourself. 332, and you have the exact date right there, 314. All right, pull up your chart. Go to 314 FXI, 3:32 p.m. Matt Maylie says, I will be buying a few more FXI calls before the close. And he bought some more in the morning too, right there, 9:53 a.m. I'm just showing you guys so that you see really, like this is there in the chat room. You can find it for yourself. I just searched it there on the search bar at the top. Um, I looked at the date. Okay, so you can see right there the entry, right? I'm going to take a flyer and buy some FXI March 18, $30 calls. So, I mean, and again, keep in mind, we are trading other stuff there, right? Exit there for the FXI. Adding QQQ puts, right? So Matt's trading a lot of different things out there. VIX calls as well, or puts, whatever it is. Matt will trade on both sides, and not just on one side for you guys to know. What do you want me to zoom on again, Fernando? The FXI one? That was on the 14th. Or on the Q ones. Iron Condor. Well, I mean, if you ask him to do an Iron Condor, trust in God, I mean, he'll do it. But these are just calls and puts that he's doing. So buying a call or buying a put, these are from these are from April because I had to go find the FXI trade. But we pull up to the more. I mean, look, this is another example, really, when he says, hey, I just want to take a minute to express my view on inflation. I strongly believe that this is not bullish for the stock market in general. Sure, in some stocks will do quite fine, especially ones that are commodity related. So, I mean, there's a really, really nice piece here that he put about inflation and markets. And this is on top, right, of the trade ideas and setups. Um, Again, giving you some of the best right there, best leverage inverse ETFs for bear. Like there's so much here that like falls into the education, into the trading, into having the right tools to get the most out of the volatility in the markets, because that is what we're looking for. A lot of people shy away from the volatility, telling you Matt welcomes it with arms wide open, and it's fine because honestly, I see it. Look, corrections happen a lot quicker than stock market going up. So you can make a lot more money a lot quicker when these things happen. but you need to have the right tools for that. You need to be trading the right instruments for that. And I want to give a quick shout out here. C. Wilson, newest member here of the of the Stock Picks Inner Circle chat room here with Matt Maylie. Let's go. Shout out Wilson. Let's go. But yeah, Fernando, you can see right there the entries, the exits. I mean, look right here. This is the 8th. I'm going to sell my SQQQ April $36 calls right here for a very nice profit. So I mean, and the thing is that like really why I like this is because I have this open throughout the day, literally, literally just like I mean, I have multiple screens in my for what I do, and of course I have a screen where I have some things for trading, and the chat room really covers everything because you have a lot of people there that like mini Matt Maylies that have been kind of trained on the strategy as well, and Matt always coming in ready with the trades, right? With the trades, with the setups, with the entries, exits, and actually somebody asked me about Iron Condor, but it looks like he posted something about some strangles or straddles on the index ETF should be a pretty good idea near. So I mean, look, people ask him about different things, but for the most part, buying calls and buying puts, which is the most simple type of trade. Remember that some of you guys were asking, will Matt Maylie provide um, will Matt Maylie provide like trades around Fed meetings and earnings and all that stuff? Well, of course, because we're trading the volatility. You tell me a meeting or you tell me an important date, I'll tell you we will be already looking forward to that date with trade setups already ready. So um, again, look at this. Remember, Fed's meeting. Okay, full description, explanation. What's happening? How are we going to react? What do we do? What do we don't do? Right? There's a lot of things to cover, guys. Matt puts it all here, plain simple English to understand. Instead of giving you a 20-page financial report, you really get it down to what's happening. Fernando asking, is this consistent? Of course, Matt's been doing this for 40 years. I call that consistent. Um, Jacqueline on YouTube, it's my first time here, so just taking it all in. Very grateful for his knowledge and time. Jacqueline, yes, I agree. Matt is very grateful. He does have a great passion for trading, for helping retail traders. That's not a common trait for folks that have been in Wall Street for that long, really. So the fact that Matt can, um, come out and help retail traders navigate these markets is great because look, I talk to thousands of traders a day, and the traders in Matt Maylie's chat room, they've been doing pretty well throughout this entire correction, extremely well. Just look at that. It's so many, not just the FXI or it's so many other trades, and it's you're not going to win all of them. Absolutely, that's you never win all of them. Nobody's perfect anywhere, but if you win more than you lose, and you're winning on 2, 3, 400% gains or 50, 70, like because keep in mind we are trading those kind of options that will move with that volatility. That is specifically why we're doing it. That's why we use leveraged tools really to do that. And we also do that by using the right types of contracts for options. So, and also the timing is really the most important part. Obviously, this sounds so easy to do it, right? But like, you time it wrongly, you lose everything. But keep in mind, timing is important. And I'm telling you, I don't know how long you've been doing this for. I don't think it's 40 years, and I really don't think it's at the equity level like Matt Maylie is doing it. Um, to be honest there, right? So it's just great that you're able to get this, right? You're able to pretty much get in Matt Maylie's head on all the trade setups he's looking at, his entries, his exits, and literally just write off his 40 years of experience. You write it off. So a lot of people that are new that are, doing pretty well in that chat room, that they are likely doing better than other people that maybe have been doing this for 5, 10, 15 years on themselves, trying to figure it out or trying to quote unquote wing it. And there's no need to wing it. You can you can take educated bets, if you will, and be positioned to win big if you win. So there's also a lot of thought process, fundamental analysis that comes into this. It's not just a matter of just throwing the dice there. And really, you'll see. I mean, you saw Matt. You just saw him talk for like 3 hours here. He does, and he's always giving you guys information, comments, commentaries in the chat. And this is the chat room. All right. So Matt's important messages. Um, SN Rajesh, is the chat room open 9 to 5? Yeah. Well, it's open all day, man. But like Matt's there 9 to 5. Um, so this is the chat room, right? I have it in the main page here. So you can see that there's two of them, right? There's inner circle chat and so everybody kind of shouting out there for the day, but so basically you can see that everybody is there. Pretty much every single, like, I mean, and then in this part of the chat room, you see that you have Matt and all the other people that, all the other students, all the other members, right? So the other members are there with Matt and they're all pretty much talking, right? So that's for everybody to post. The other chat room, it's called Matt's important messages right here. Once you click on that, you're pretty much going to get all of his entries, exits, commentaries. This is a chat room that only Matt can post. So you don't have to scroll to find the trades or nothing like that. I know so many people that are in this chat room that have made a lot of money and they're literally working full time and they love it. They love it. And so you can be full-time trader or you can be part-time or whatever. But really all it takes for you to get in, right, in Matt's live trading room is to have a Windows tab open, just like you have a tab open for your Gmail or for whatever, whatever you're looking at really on the internet. You can always have a tab open there for the chat room. That's what people do. So, I mean, if the difference between you making this, making this happen and being able to profit with Matt's trades is not having a Windows open on a computer, on a laptop, like it's easy as just buying another monitor. It's like $40. You can buy another monitor, but look, you need these tools for trading. You need to kind of step up your game at one point. This is not the market of 2020 when everything was going up. And a lot of you guys already know that and have felt that in your accounts. So it's really time to, team up, right, with the right mentor, the right educator, someone that's you can say, okay, 40 years, like I can vouch on that, right? And it's like, if you're about to get surgery, do you want to get surgery by, the recent grad that just got out of med school or someone who's done it 40 years successfully with an amazing career on the news all the time? So I'm telling you, it's hard to get Matt Maylie on these sessions. You guys think it's easy, but it's not, like this man's busy. So the fact that he's here, he's able to make this happen for you guys. And he's actually like, gives us time, right? To help you guys, traders and all you people on YouTube and Zoom. And Libya says Matt is big, bro. Yeah, definitely. He's super big on helping traders. And you can see in the chat room, it's so straightforward. It's so straightforward. Like you can't mess this up, really. I mean, I'm going to sell some of my SQQQ April, $45 calls. Like it's, you have the right contract, you have the symbol, you have the expiration date, you have the strike price, you have if it's a call or a put. That's really all you need. And you have the time. So everything is, fully transparent here, right? Matt, as soon as he makes a trade, he will let all you guys know. KH, man, this is just not, this is not the same market. The market's evolving. There's a lot of things happening. And there's so many themes that are moving the markets. And really, Matt is able to kind of work through all of them. How many members in the chat room? Fernando, I don't have the exact number, but I know that there are 43 people right now. 45 people right now that have this open. I don't know what they're probably just reading. Keep in mind, there's a lot of people that are here and they're scrolling through the stuff and just seeing what other people are talking about, because a lot of the members talk about trade ideas and setups, and other people that are just scrolling and learning through Matt's posts. Okay, the level of information, the level of research, the level of trades you get come from this is like literally equity level kind of stuff analysis because Mark is a chief market strategist. So he's doing that for the global markets already as it is, like looking at all that stuff. And he's been trading for 40 years. He was a director of Merrill Lynch for about 11 years or 10 years, managing the two biggest accounts in the world, BlackRock and Fidelity. And he was a trader there as well at Solomon Brothers for about 10 plus years. That was the hottest firm, biggest firm in Wall Street there, late 70s, 80s until it got acquired. So, I'm telling you, if you're new to this and everything, like I'm telling you, Matt has the background to back it up and the experience, which is really what matters at this point. You see a lot of people on the news scrambling to find a reason why it's going down. What do? They call in Matt Maylie. Like I'm telling you, it's all the time. It happens all the time. Especially now. That's why I was telling you it's hard to book Matt Maylie here because everybody out there wants to ask him stuff. So, but you have him in the chat room. You don't have to book Matt Maylie for an interview on Bloomberg or CNBC or anywhere to be with him or trade with him. Why? Because you have this chat room, and that's why this is a private chat room for Matt Maylie, where he's posting entries, exits, all of his market commentary. Keep in mind the news, they're going to ask him questions and things like that about, certain stocks. But here in this chat room, he is giving you his original trade ideas and setups. Okay. It's not like he's going into the news and saying, yo, I'm shorting the Qs or nothing like that. So this is really just for you guys. The information that you get in this chat room is literally only for you guys, for the members here. So, KH, I'm telling you, join the chat room. If the PN if the PNLs you don't like it, try something new. If it's not working out, then really it's time to join a community, right? I know so many great people there in that chat room. I've signed all of them up, and amazing people. Everybody's hungry to learn, hungry to trade, and really trade with Matt. And they have all lived through the trades. So you can all ask them about the FXI trade or the Viacom trades or whatever, ask them. And then that's why. And then when you ask yourself, why do they love Matt so much? Well, I mean, if somebody gave you that sort of stock tip, pretty sure you'd love him too. Lake Capri, yeah, this is a separate chat room. Correct. This is Matt Maylie chat room. Um, Everybody that does join gets a free laptop. There's a 7-day money back guarantee. That's literally no risk for you at that point. Um, no, there should be no excuses at this point, guys. How many members in the chat room? Fernando, I think we went over that earlier. It says here there's about 40 people online right now, but I mean, that's how many people are online right now. C Jenkins, I'll figure that out with you, if you want tomorrow or something, but I think I think we can send it to Hawaii. Yeah, and don't worry about the scheduling of the laptop. We can work that out. That's minor detail. Um, Fernando, yeah, that's what I'm saying. Like, there's 40 people online right now in the chat room. You can see it there on the top. But I don't know how many are in there in the morning at the open, or because it's obviously more than that. I'd probably say maybe 70. Um, it's really not like we got 10,000 people. It's not like that. So um, yeah. So yeah, and again, for Matt Maley's chat room, that's really what we are discussing here today, Capri. And all right, so I showed you guys the chat room there. I think I didn't mention this, but you have sound notifications here as well. So keep in mind, right? You're at work, you're doing your own thing, whatever, and you click just on Matt's chat, right? And that's really the way I do it, because if I have this one on, there's a lot of a lot of messages. So if I'm trading, let's say if you're working full time or if you're busy, whatever, even from your phone or anywhere, laptop, anything, computer, you click on that bell and you get a sound notification when Matt will post something there. So at this point, really, you have everything there, all the entries, all the exits, market commentaries, and the sound alerts, right? Because number one, why would you even want to be in a trade, in a volatile trade, and not be in, like, looking at what's happening in the trade? It just wouldn't make sense. Like, why would you do that?
I really encourage you that if you're going to be trading volatility, you can't, you really cannot be like forgetting about the market. Like, okay, let me buy all these calls that expire tomorrow, and I'm gonna go to the supermarket and I'm gonna go do all the errands that I wanted to do and just forget about this, right? Like it doesn't make sense. So, you shouldn't do that. If you are in a trade, if you have an open position and you're trading volatility, I would at least be have the chat room open or somewhere in your computer or in your phone that you can see it, because these things, keep in mind when, for example, when FXI went up, so much 1,000%. Let's say you went out on, I don't know, you went out and you did things for 4 days and you didn't get into that FXI call, so or you didn't maybe sell because you didn't get it, you weren't looking. So you were, and I know people that, for example, let's say you could have bought something, you were up a lot, and then you never sold because you never, so that's really why it's important that you manage, and that comes down to knowing how to manage your trades. If you're trading volatility, you need to know that, hey, you need, at least if you have an open position, you need to be looking at what's going on. So Fernando says he's trading full time, so just looking to learn from the best. That's all. I mean, yeah, and if you're working full time, man, like this is it, dude. This is it for you. You got other stuff, I bet, and that's fine. But at the end of the day, really, having that guide, there's no better tool than having a person who's been doing it for 40 years. Um, it's called experience, and you really can't. This is the closest you'll ever get to buying it, really. Um, with somebody like Matt, I'm on the same page there with you. But even if you're working full time, like I've talked to people that made a lot of money on all these trades, and literally, they have different tabs doing whatever they're doing, checking their email or anything else, and they just have this open with the sound notification. Matt posts an entry. You got to do is go on your phone. In less than a minute, you can buy that call. So, when people tell me, "Oh, I don't have enough time," it's like, I understand, but hey, there's a lot of people that I talk to that do have time, and they work full time, and or many of these people, they're very busy, they run a company or something like that, want their money to work for them, and that's why they have that sound alert, right? um, so guys, that is the time is money with options. Absolutely, I can tell you that. And when you're trading volatility, of course, like it just, and that's really a mistake that you can make when you're starting. But if I can help you not make that just by telling you like to not do that, because that's not really how we want you to use it. That's not how it's meant to be used, right? Because you're trading volatility, these things go up 50, 100, 200% at the open, and then they could fall, 10 minutes into the open, 15 minutes into the open, and you lose, a lot of those gains. You're not able to sell for max gains. So we want you to sell for max gains. That's why we want you to be in the chat room so that you can see with your own eyes the exact moment when Matt is posting his exit, because he's not randomly saying I'm selling here and I'm buying here. He's not throwing a dart on a chart. He's doing all the technical analysis. He's doing this. He's been doing this for 40 years. So all you have to worry about is buying and selling when he's telling you with those alerts. Um, so I'm trying to explain this, like as the most straightforward way, because it is as simple as it can get. All you have to do is buy a call or buy a put. That you're not doing a spread, you're not doing a condor. Do not feel overwhelmed. This information of what is a call and what is a put, like you can find that in YouTube and just grasp that concept in like 5-10 minutes. Like that should not be something that's holding you back from being in Matt's chat room and from trading with him. um, that just shouldn't be a reason for holding you back, because I'm telling you, there's people that had that same hesitance that you might be having right now. They took the jump, they went in, they're doing successful, and they're like, hey man, thank you so much for just, because really all they needed to do is do a quick whatever YouTube search or somewhere, or I can send you resources if you want, because that's so basic. What is a call? What is a put? Like you buy a call, stock goes up, your call goes up. You buy a put, stock goes down, you make money. Um, and really that's the way you make the most amount of money in the market, because you're making money both ways. And there's a lot of people that I talk to on the phone that for some reason they don't like to, they just, I don't know, I'm not going to say they like to lose money because they don't want to lose money, but you have to be able to, the market doesn't always go up. This is a great year for a great lesson for all the retail traders out there that the market does not always go up. But not only that, but you also want to know how to make money when that happens. So that next time you're not caught with your pants down and you're actually, making money when this happens instead of just holding that bag and trying to hope for a rally, which, it's, um, you can't just be a perma bull, right? You have to know, you have to not get emotional about it. Stocks will go down and you want to make money when they do. It's that simple. You have to be a full 360-degree trader, whatever, like you have to be able to do not just go long, but also recognize, that you can go short in a company and also, make money when that happens, not just sit and wait on the sidelines and watch your portfolio get destroyed every day. So C Jenkins need to run right now, but I'm interested. I'll send my current address in Hawaii. Yeah. So, all right. So, CJ Jenkins. Yeah. So join with the link. Once you join in that link, you're going to get an email. Once you guys join, you're going to get an email, and in that email, it's going to say laptop delivery. Just click on it. You put in the address, and once you put the address there, we'll ship it out after 7 days, which is the 7-day money back guarantee. Fernando, I mean, there's a lot of puts, man, here and there. You have to go through all of it, man. We're not gonna do that right now, obviously, but you can see there's always puts and calls, and he's trading both of them, but he's not just buying puts. But I'll tell you, he's been buying a lot of puts for the past month since the correction started, and I mean, you can ask all the members, but from what they've told me, several people have doubled, tripled their account. Some of them in a month, some of them in a week. I mean, it's gonna be different for everybody, you know. Like if you joined the day of FXI and you made that trade, you could say, hey, I made this much on my first day. But is every first day like that? No, I'm realistically saying that. Um, but the other trades, they're still within a nice range, right? Okay, so I showed you guys the chat room. I showed you the format. Where are the sound alerts? And there is a session on Tuesdays. And in that session, guys, that's about 30 minutes or so. Matt Maylie will go over all these things with you. Well, and everything from education to market updates, what's happening out there, how we can profit, adjusting the portfolio, right? Adjusting the portfolio on a weekly basis and also on a daily basis. That's why we have that chat room. Okay. And just make the most out of it. If you really want this to be a great journey, I suggest engage, participate, because it's a great community. Some great folks in there. I can vouch for that myself. And it's every day. It's every day. Once you join a community, everything changes. And if you're doing this by yourself, I really think you should, stop it and just start trading with a community that makes sense. Doesn't have to be this one, but if you do feel that Matt Maylie is a good fit for you, if you see that he goes above and beyond, if you feel he's gracious with his time and he looks genuine and willing to help you, and then join, right? And if for any reason none of that checks out, look, man, we have a 7-day money back guarantee. If that doesn't work, hey, it's fine. You get all your money back and that's it, right? Everybody moves on. So it's that simple, guys. So I'm going to leave the contact here in the chat room if anybody wants to join, and I'll leave my contact if anybody has questions. I'm going to leave the stream running, guys. I want to give everybody here a great shout out for being here. C Jenkins, I've been seeing you around the block here, so shout out. Thanks for joining here and tuning us here again. Mohammed, shout out to you as well. All right, guys, we're gonna leave the link here, the thing here running for like about a couple minutes, and this the whole 70% off thing is gonna expire at midnight. Just don't tomorrow. Again, it's gonna the price is gonna change, so just make sure that you do this before midnight. And if you're in California, we do have a little bit of a time, a little bit of a lag because we do know that California is a little bit behind, on, so on time. So shout out for everybody for being here. I want to give you guys a huge shout out. Thank you. Matt was great. Fernando is in California. I know, you see, I'm aware of all these things, man, like, because you guys are international. Like there's people that are here that are from, I didn't ask where everybody's from, but typically if I do, you'll see everywhere, man, like from Nigeria, South Korea, Poland, all over the world, dude. It's really great to be part of such an amazing community that has like no boundaries really. Married from Florida, me too. So you have people from all over the world, Canada, like, and it's fun, like I talked to all these people, Fernando. So, um, once you join the chat room, you're gonna feel that energy really, and it's great. Waking up to, you have your trading partners there, and everybody's looking at different things in the market, helping each other out. It's just a great sense, um, brotherhood and sisterhood there. Everybody there is getting along. We're working together, and it's great to see that. Matt's the leader there. He obviously knows his stuff, and it's just great to be able to learn from someone like that, and not just that, but make money with him. So it's a great experience. All right, guys, shout out to everybody. Thank you for being here. That was Matt Maylie, Chief Market Strategist at Miller Tabak and lead trader at the Benzinga Stock Picks Inner Circle chat room. So shout out for everybody. CJ Wilson, again, welcome to the family. And again, guys, any questions, email is in the contact, numbers in the contact. But hey, don't wait to talk to me. This thing expires at midnight. Okay. And I do have to get to a couple emails here. So yeah, guys, thanks for joining, and we'll see you guys next time. Let's go.